Yes, Francine, and I'm often reminded when you look at the impact that sanctions are going to have in an economy like the United States, for the sanctions that we put in place, they stand to lose $1. When you look at the impact on the European Union, it's 10. So for every one they lose here, some governments would lose up to 10. So of course the impact is much more severe here. The other thing, of course, that factors here is not just the economic fallout, but really the diplomatic way forward. And that also splits opinion between European leaders. Some who still believe there is a way to engage with Russia, to go for a ceasefire, and to really end the brutality of wars. Others, including the Estonian Prime Minister, who will tell you there is no diplomatic will on the part of Russia. There will be no diplomatic solution as long as Vladimir Putin continues to believe that Ukraine is existentially a part of Russia.
Bloomberg's Europe correspondent Maria Tadeo, thanks so much, of course, for some great work on the ground, and we see the leaders continuing coming in. I think I also heard a helicopter above Maria, so we could see someone coming in that way. Now, in response to the war, the ECB unexpectedly accelerated its wind down of stimulus. President Christine Lagarde's main concern seems to be that the conflict could propel prices even higher.
The war in Ukraine is a substantial upside risk, especially to energy prices. If price pressures feed through into higher than anticipated wage rises, or if there are adverse, persistent supply-side implications, inflation could also turn out to be higher over the medium term.
Well, joining us now is Monica Defend, head of the Amundi Institute. So, Monica, thank you so much, as always, for joining us. How much impact does this have on inflation, much longer term? It's going to be a shock in the short term. What happens after that?
We think, we have been calling this a regime shift, meaning higher inflation, lower growth. If it's a regime shift, it means that it's going to last for longer than 1 year or 2 years. So we really, and we were a bit surprised by the expectations that the ECB delivered yesterday, because just for 2022, we're already reaching 6% forecast on the CPI. Obviously, it is rather difficult to pencil forecasts amid macro fundamentals that are going to be strictly related to the evolution of the geopolitical risk. But inflation is going to be higher for a protracted period.
Yeah, Monica, what does that mean? And I have to say, when we were looking at the press conference of Christine Lagarde, you saw that widening spread between Italian and, for example, German bonds. What would a policy mistake from the ECB today look like?
Well, the ECB has a dual mandate: inflation and the transmission of the monetary policy, policies. And this is channeled through the spread, being credit or peripherals. It is clear today that the ECB is focusing on controlling inflation, despite they have just 5.1 expectation for the year. They are not that worried on the transmission of monetary policy, just because maybe for them an alert threshold on the BTP bond might be 200, and we are not there yet. However, we do think that the EU plan might be a game changer into this situation.
Monica, what does that mean for then how nimble you have to be in your portfolio? The situation in Ukraine could escalate or it could de-escalate, so you would have to have two very different market views.
Yes, indeed. For the time being, we remain quite cautious. We've been putting in place a lot of hedges on the credit exposure, as well as the equity one. So the first objective for the time being is to manage the risk and protect the portfolio. Then, when more visibility will be on the radar, we might put in place some relative positioning in between the US and equity and European equities, for example, as we do think it will be the case for Europe to pay an higher toll than the US.
Monica, what does it mean for, when you look at some of the equities, and I know you're saying you're maintaining a positive outlook on some of the value stocks, when do earnings get hit by this higher inflation?
We think that it is not yet there. If you look at the difference between the PPI, producer prices, and the CPI, the gap is extremely wide. It means that this higher pressure on cost has not been transmitted, passed through the final consumer, and this eventually might have an impact on squeezing the margins. So when it goes to the European earnings, we might also see the risk, a higher risk for an earnings recession. So we won't be surprised to see earnings in the euro area between -5% and +5% growth.
Okay, Monica, thanks so much. Monica Defender, head of the Amundi Institute, stays with us. We're also looking at Didi slumping 20% in pre-market in the U.S. right now. It's said to halt the Hong Kong listing on, of course, this data probe. We've been following the Didi story right from the very beginning. This has not been confirmed yet, but it was the biggest story overnight, away from what's happening in Ukraine. Now, we understand that it failed to appease the Chinese regulators' demand that it overhauls its system for handling sensitive user data. This is according to Bloomberg sources, and therefore it has suspended preparations for its planned Hong Kong listing. Coming up, U.S. CPI hits a 4-decade high for February. We explore the latest data from the Fed and its impact with Monica Defend. This is Bloomberg.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so.
You need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The numbers were in line with expectations.
Inflation's not likely to roll over.
Not only is it not slowing, it actually continues to accelerate.
Higher commodity prices, higher food prices, higher input costs. That's difficult for central banks and for equity markets.
We kind of have to see what the fallout is from the invasion of Ukraine.
How long this conflict plays out and how disruptive the sanctions regime actually is.
This is really just something that makes a very difficult situation worse.
We're going to hear a normalizing, not tightening message from the Fed.
Sitting on the sideline isn't an option. I think they have to move.
I think the Fed has no choice but to sort of lean toward the more hawkish rhetoric.
We can expect probably fewer interest rate hikes than people were projecting, just 3 or 4 weeks ago.
You have to go cautiously.
This is obviously a tricky time for the Fed.
Well, that was Bloomberg TV guests weighing in on the latest data out of the U.S., where inflation hit a new 40-year high. Now, most of the impact from the oil surge hasn't been felt yet, according to economists, but traders are weighing the implications for Fed policy. Well, still with us to discuss U.S. CPI data and the wider markets is Monica Defend in Milan, head of the Amundi Institute. Monica, I want to talk about U.S. CPI and, of course, the Fed, but I also want to go back to see what the German bonds have been doing over the last, I think, 2 or 3 days. And the fact that they were really whipsawed yesterday, the ECB taking most by surprise, ECB saying they're staying the course on inflation, but really it does seem that the hawks are in charge. What's going on? ECB saying they're staying the course on inflation.
Well, we were quite surprised about the disconnection between the initial statement where Christine Lagarde was emphasizing the risk to the downside on growth and on upside and inflation, the forward guidance, namely the acceleration on the APP, and then the projection. So it looks to me there is a kind of disconnection, and eventually the risk might be the one of the anchoring inflation expectation, and this might have a brutal effect on the markets. While obviously it's a kind of having an impact on the transmission of monetary policy, as you have been seeing. The spreads movement. I think that eventually what she wanted to do was to leave in the hands of the EU to deliver a plan, which is I think it makes sense, because it cannot be the central bank, it cannot be on the monetary policy, it has to be on the fiscal policy. This crisis is going to exacerbate an already uneven outlook across countries and across people. Inequalities are on the rise, and this is something we need to pay attention.
Yeah, and Monica, I guess, the question is, I mean, the fear of another recession is never far away in the euro area. Talk to me a little bit about how you play the differentials between what we're seeing, for example, in Europe and the US with what the Fed is programmed to do.
We think that the monetary policy course is really different in between the Eurozone and the United States. When it goes to the United States, we were already judging that the market overreacted in terms of expectation of on rate hikes, for example. So we stay with the idea that they will deliver 4 hikes this year, and still on the quantitative tightening, they need to be smooth. But they are really on a different point of the cycle because of the energy dependence, because of the geographical proximity of the Eurozone when compared to the United States.
So have you ever... Thank you so much, Monica Defender, head of the Amundi Institute, joining us this morning. Now, coming up, Premier League football club Chelsea's sponsorships are beginning to unravel as sanctions against Russian owner Roman Abramovich bite. We're live from Stamford Bridge next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Economics, finance, politics. This is Bloomberg Surveillance, early edition of Francine Lacqua here in London. Now, prominent football club Chelsea's sponsorships are beginning to unravel as sanctions against Russian owner Roman Abramovich kick in. Mobile phone company 3 has become the highest profile sponsor to cut ties so far. Now, for more, Bloomberg's Leanne Gerrans joins us outside from Stamford Bridge. Leanne, 3 is not the only sponsor of Chelsea. Could we see more ties being cut?
Francine, good morning to you. And as you said, yes, I am outside Stamford Bridge, which is one of the most iconic football stadiums here in London. And it really appears to be business as usual. As we've been standing here, we've seen people who work for the football club going in and out of Stamford Bridge. However, as we know, things are not as they seem, because yesterday the UK did sanction the owner of Chelsea, Roman Abramovich, because of his links to Vladimir Putin. But as you did mention, there 3, they are one of the big sponsors of Chelsea. They sponsor the T-shirts that the Chelsea players wear and the fans. You always see them when they're running on the pitch, a big 3 on the front of the T-shirt. Now, that sponsorship deal was worth £40 million. We also understand that Hyundai, the South Korean car manufacturer, is now also thinking of severing ties with Chelsea. Another thing we also have to put into context is some newspapers and some analysts are also predicting that other sponsors could now rethink their links to Chelsea Football Club. This could be Nike, who have a massive $900 million sponsorship deal with them to fund and make their kits. And we also know Hublot, which is the famous Swiss watchmaker. But they could decide to do this. We haven't heard anything from them as yet, Francine.
Leanne, thank you so much. Bloomberg's Leanne Gerrans there live from Stamford Bridge. Now, let's also get straight to Bloomberg senior writer Stephanie Baker, who's been writing extensively on this. Stephanie, if you look at the sanctions, what does it actually mean for Chelsea Football Club's future? Can it be sold? And like, how nuanced are these, laws or agreements?
Well, that's the big change here, is that it puts the potential sale of Chelsea in doubt. You now have an extraordinary situation whereby it is the UK government that would be overseeing the sale process. Already, there have been 20 odd bidders for Chelsea after Roman Abramovich put it up for sale, but he couldn't sell it fast enough. And now I think the sale is very much in doubt. How does the UK government oversee that process? Do they give a special license for that to go through? Any proceeds from that sale would not go directly to Abramovich. They would be frozen. What happens to the proceeds? All those questions remain unanswered at this point.
I mean, could we see something like nationalization, Stephanie, or would that be crazy?
Well, the proceeds would be frozen, and the proposal by Abramovich before he was sanctioned was that it would go into a foundation that he would control, but would go to benefit victims of the war in Ukraine. Now, could they create a similar type of setup that perhaps the UK government runs, takes those proceeds and provides support for refugees, fleeing the war in Ukraine. That's uncertain. This is uncharted territory. This is, an extraordinary situation where effectively the UK government is running a Premier football club. There will be requests for further relaxation of the sanctions so that they are able to operate, sell tickets to games. At the moment, players can't be sold or bought, so they're frozen in terms of the player market as well.
Yeah, it's just an incredible story. Thank you so much for your ongoing reporting, Stephanie Baker, there, Bloomberg's senior writer. Now, we're also looking at live pictures of European leaders arriving. We have a number of heads of states that went into the meeting there in Versailles, talking about some of the things that they can or will not do to help Ukraine. We're expecting then press conferences maybe in a couple of hours after the leaders meet on the table possible sanctions, although this is not something that many are expecting. But EU leaders could focus on unity, they could focus on defense, so we'll have plenty more, of course, from Versailles. I'm Maria Tadeo there on the ground. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
EU leaders meet in Versailles to discuss energy and defense. In the US, President Biden will demand the end of Russia's preferred trade status. The ECB accelerates plans to wind down stimulus. Christine Lagarde says the war in Ukraine is a substantial upside risk. And red-hot inflation, US CPI hits a 40-year high. Petrol, food and rent drive price increases in February, while the figure is likely to be even higher following Russia's invasion of Ukraine. Welcome to Bloomberg Surveillance Early Edition, everyone. It's Friday. I'm Francine Lacqua here in London. Now, the market's trying to decide exactly what side of the coin they'll look at, whether they worry about inflation, red-hot inflation that we saw from the U.S. yesterday, or whether they focus maybe on some of the risks that's already been priced in. European stocks, in terms of travel and leisure, the biggest gainer in today's trading session. The U.S. 10-year yield did touch 2%, but now 1.9%. And then crude oil, the biggest story, of course, has played through the commodities and the energy prices because of sanctions on Russia after the invasion of Ukraine, and we're seeing a bit of stability today. I don't know how short-lived that will be, but certainly traders may enjoy a bit of quiet. Now, two cities in western Ukraine have been far away from the fighting until last night when they were hit by airstrikes. Joe Biden is set to call for an end to normal trade relations with Russia, while the Senate approved a $1.5 trillion federal funding bill to aid Ukraine. Now, Vladimir Putin has proposed a ceasefire. However, his demands won't be met by EU leaders.
I have to confess that today, the conditions he put on the table are not acceptable by anybody.
We're also looking at live pictures out of Versailles, where Maria Tadeo is on the ground. I think the leaders have now all entered the palace. Some of them were giving comments as they were coming in, and then we'll see what they decide and what they say coming out. Now, the war has driven some wild market moves. Perhaps the most notable was nickel, with trading suspended by the LME. Now, some hedge funds are also walking away. Luc Sadrian has been trading metals for 30 years, but he now says the London Metal Exchange is too risky to trade. Despite being ragingly bullish on copper, Sadrian is exiting all of his positions. Now, to talk about all of this, we're joined by Caroline Bain, Chief Commodities Economist at Capital Economics. Caroline, thank you for joining us. I mean, the fact that the LME actually canceled trades from a period really brings it back to some of the dark days that maybe we saw a couple of decades ago. What's at stake now for the LME?
It's hard to know where we can go from here. The risks to supply are really quite unprecedented. The gains in price have definitely got a speculative element, but there are fundamental reasons why prices should be moving higher. For the LME, they do have to restore confidence in their ability to be the price setter. And the sort of moves we saw this week probably undermined their credibility quite a bit.
So what does it mean, Caroline, that actually some of the price fixing could move elsewhere, or will this, panic be short-lived?
I think the gentleman you were referencing just before, it's made traders very nervous that there can be these sort of moves in a day. So it will take time to restore confidence in the LME. The LME has already been losing some ground to Shanghai Futures Exchange, for example. But I wouldn't write off the LME just yet. I think we've had a week of extremely volatile prices, commodity prices, and they just need to batten down the hatch and show that they can manage things a bit better.
Yeah. Caroline, how much more volatility are we going to see as we figure out the second and third round effects of sanctions? Does it impact commodities that we haven't thought about yet?
Yes, I think so. I mean, there are obviously the commodities that Russia produces, and they've been the ones that we've seen the prices really go through the roof. But if, as we think likely, energy prices are likely to stay high for much longer, even whatever the outcome of the war, I think we're for a period of high energy prices, and that, of course, raises the cost of production of nearly all commodities, but particularly some agriculturals and metals, of course, are very energy intensive. The production of them.
So, Caroline, when you look at, be it copper, nickel, and it's actually amazing when you see what happened with nickel, that the person that wanted a short position now wants the banks to stick with that short position. So I don't know whether you have a take on nickel, or there's some other commodities that you think are more interesting out there.
Well, what we do have are estimates of the risk premium in prices. So that's the element in the price that can't be explained by fundamentals, demand and supply. And while in most cases, the fundamental price has gone up because of higher production costs, because of supply shortages, etc. The risk premium has also gone up hugely, and we tend to sort of think of that as a proxy for speculation. So I can understand why the nickel investor would like to remain short at these sort of high prices.
Caroline, what's your take on
most prices? Yeah, sorry, I'm just going to say most of our price forecasts for the end of this year are lower than current prices.
Caroline, what's your take on copper? If you look at copper or some of the other ones, at what point, I don't know whether it's a bit like oil that, at a certain level, if it rises by this much, then you see automatic demand destruction as well.
Yep. I mean, that's another thing that we're factoring into our supply and demand at the moment, is that at these sort of prices, people are going to be very reluctant to buy, and you start to see substitution where possible, thrifting, or simply just holding off from buying until a time when you feel the price is more acceptable. The other point worth making is that the latest data out of China just this morning, bank credit was quite weak, and because of the supply side being so constrained, I feel as though the metals markets haven't factored in the ongoing slowdown in China's economy, which is a major threat to demand for metals.
Yeah, do you look at some of the, the rare earths that we should be looking at? I don't know whether titanium is also part of the story. And if the likes of Apple and other supply makers get out of Russia, does that dent demand, or is it just very minimal?
There will be a dent to demand there. I mean, the rare earth story is going back to China again, really. China's monopoly of the refining of rare earths is a vulnerability that I think that the West knows about, and we've heard about potentially opening mines in North America, etc. But that is something that could one day be a threat to the big electronics companies. But that's a China issue more than a Russia problem.
Caroline, thank you so much for joining us. Caroline Bain, they're Chief Commodities Economist at Capital Economics. Now, we'll have plenty more, of course, on the commodity story. Also, in a moment, we'll analyze China's role in the Russia-Ukraine crisis. That's coming up shortly, and this is Bloomberg.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Well, we'll have plenty more, of course, on the Bloomberg Business Flash, because we need to find out exactly what's been happening in Ukraine and Russia. We also have a full market checkup on the way with your Bloomberg Business Flash. Here's Angel Feliciano. Hi, Angel.
Hi, Francine. Meta Platforms is reported to have temporarily altered its political expression policy to allow for some use of violent speech. The parent company of Facebook says it will allow for calls for violence against Russian invaders in the wake of the attack on Ukraine. Calls for violence towards Russian civilians will not be permitted. JP Morgan, the biggest bank in the U.S., along with Goldman Sachs, is pulling back from Russia in response to the country's invasion of Ukraine last month. Goldman Sachs says it plans to close its operations there. JP Morgan calls its activities in Russia limited. And singer and fashion entrepreneur Rihanna is working with advisors on an IPO that could value her Savage X Fenty lingerie company at $3 billion or more. Bloomberg has learned a listing could happen as soon as this year. Rihanna's company raised $125 million in January. And that's your Bloomberg Business Flash. Francine?
Thank you so much, Angel. Now, the Chinese Premier Li Keqiang told the National People's Congress that the Chinese government will meet this year's about 5.5% growth target, but he also said doing so will be a challenge and will require additional support measures.
Achieving a growth rate of around 5.5% is actually achieving stability at a high level, which is equivalent to progress and won't be easy. There must be support from macro policies. We will make our COVID policies more scientific, more targeted. In terms of Ukraine, China believes every country's territory should be respected. We should make all-out efforts to support Russia and Ukraine in reaching a ceasefire. If the U.S. chooses to ease its export restrictions on China, there would be an even larger trade volume.
Well, to talk about China, of course, the read across between Russia and China is Damien Sassower, Chief Emerging Market Credit Strategist at Bloomberg Intelligence. Damien, thank you so much once again for waking up early on a Friday for us. Beijing attempting to remain on the sidelines while casting, of course, shade on U.S. NATO for provoking Putin. So what is China's continuing role in the Ukrainian crisis?
Well, Francine, it's stability, clearly. And what China did over the week, I mean, in terms of widening the FX band, basically, yuan ruble was basically lagging dollar ruble for the better part of this week. It couldn't find a clearing price. But once it announced that it's widening the band from 5%, that means 5% movement on either side in yuan ruble, to 10%, that is bringing things more in line. And look, I mean, again, if China's trying to promote stability here, it's trying not to pick a side. That's going to become increasingly difficult in the future, especially if the West agrees on oil and gas, on banning oil and gas imports, Francine.
So, Damien, Li Keqiang also revealed that he won't be staying on as premier following the upcoming party reshuffle. What does that mean for his involvement right now?
Well, it definitely indicates a softer base for President Xi's third term, right? I mean, none of us can even speculate what's going on inside the NPC in terms of whether President Xi's going to be elected to a third term. I mean, you know, my base case is he absolutely will be. But just the fact that that he's not going to be running for the premiership here indicates perhaps a bit of a softer base. And, you know, you and I can only guess what that means in terms of China's approach to Ukraine. Again, the meetings that President Xi had this week with Schultz and Macron go a long way to sort of alleviating a little bit of the risk there, but there's a lot more still to be done, and China has yet to take a side, and we'll see over the coming weeks, certainly if the West starts banning oil and gas imports, if they can continue to do that.
Damien, I know large Russian corporates, I mean, I'm thinking of Gazprom and Rosneft, continue, we understand, to make payment on their outstanding U.S. dollar bonds. I know Gazprom did. Rosneft, I think we're still waiting for the money to arrive in certain accounts. But what comes next for foreign creditors?
Francine, this is the key question here. You're absolutely right. Rosneft made a $2 billion principal payment earlier, well, on Wednesday, actually, and Gazprom made a $1.3 billion payment. We fast forward to Wednesday of next week, the 16th. That's actually Fed Day, but it's also the day that China's supposed to make due on $117 million in coupon payments. Now, these bonds do not have a clause in it that allow Russia to make that payment in rubles. There's been a lot of talk that Russia's going to make these payments in rubles. So we'll see whether or not they make those dollar payments. But if you look at the price of the bonds, 24 cents on those bonds, you know, the market's not pricing in any such, you know, it basically pricing for risk of default. So, you know, my guess is that probably will happen. That'll kick off a 30-day grace period. And then, yes, I mean, if S&P, Moody's, and Fitch are right, you know, it's all but assured that China's going to slip into default here on its dollar bonds.
But Damien, if they pay back in rubles, and actually as a foreign entity, you don't really have access to rubles, it's basically a default, right?
The West doesn't want Russia's money, and Russia doesn't want to pay it, Francine. I mean, so, you're absolutely right. But look, I mean, in terms of these specific bonds, it's going to be a matter of, look, if you look back in 1998, yes, Russia defaulted. It defaulted on its local currency bonds, its OFCs. It did not default on its external obligations. They were able to restructure that. This time around, all bets are off. And if you listen to someone like Jay Newman from Elliott, former, the guy who ran Paul Singer's, Argentina crusade going back, he believes the bonds are effectively worthless. And he also called into question the fact that these bonds adhere to UK common law. If that's contested, if indeed Russia believes that it's the Russian court system that has jurisdiction here, I mean, this could get very messy.
Yeah, it certainly could. We'll have plenty more, of course, on that. Damien, thank you. Damien Sassower, Chief EM Credit Strategist at Bloomberg Intelligence, stays with us because I also have more specific questions on some of the other emerging markets. Now, coming up, JP Morgan joins Goldman Sachs in pulling back from Russia in response to the Ukraine invasion. As Wall Street corporate exodus continues, we have more on that next. This is Bloomberg.
First step in building a connectome is to get your hands on some brains and then cut them up. It all sounds very grim, but Harvard turns out to be quite efficient with its brain harvesting. Jeff's lab can do a year's worth of research with a single mouse brain. Small chunks of the brain are fed into the slicer, where a diamond blade carves off a thin sliver of tissue. The tissue floats along some liquid and onto a piece of tape. The brain slices are then put into this very large machine, where they're photographed in the finest of detail. Software helps stitch the pictures back together into a single 3D image, and algorithms are applied to help make sense of what's going on inside of the brain.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, still with us, Damien Sassower, Chief EM Credit Strategist at Bloomberg Intelligence. Damien, I have a million questions about emerging markets in general. First of all, where are emerging market investors? I don't know if they've had time to get out of Russia, actually, but, if they leave that part of the world, where do they go to?
Well, I've had some very interesting conversations with fund managers over the better part of the last few weeks, Francine, and heading up into March 1st, really call it February 28th, investors were able to move, local currency, emerging market debt pretty easily in size. But, after March 1st, all bets are off, and really the market has ground to a bit of a standstill. EM local debt is off something on the order of 7.5% year to date. EM dollar debt is off even more, 11% year to date. That's the worst start on record. But where are investors hiding, Francine? They're hiding in those countries that are high carry, resource rich, and most geographically distant from the crisis in Ukraine, right? So that would be Latin America, Brazil, Chile, Colombia. It would be South Africa. It would be Peru. Those are the currencies that are probably up the most year to date. And then which ones have gotten punished most severely? It's been obviously Eastern Europe, Poland, Hungary, the Czech Republic. I mean, we know about Viktor Orban's comments here today. The Hungarian forint has gotten absolutely hammered off the back of this. So, those are places you probably want to avoid. And look, I mean, if things continue to escalate, it's just going to be that bid for king dollar all over again, and that bodes ill for all emerging market currencies writ large.
Yeah, and Damon, actually, we have a great chart looking at Latin America and how it's outperformed emerging markets and developed markets since the beginning of the year. Let's bring the chart up, and it really puts beautifully into a graphic what you were just saying, 13.7% year to date. Wow. But then Latin America also has issues of its own in terms of structural and things like that. So where do you want to be invested in Latin America?
Well, I mean, it's not only structural, it's political, right? I mean, we've got a big election coming up at the end of this year in Brazil. I mean, we have basically Jair Bolsonaro, all but, the polls are basically assuming that Ignacio Lula da Silva is going to win the election. I mean, the return of Lula, and this time around, look, the markets are sort of warming up to him the way they did when he initially took the leadership in Brazil going back to the early 2000s. So, I mean, it might actually be a good thing. It might even be perceived as business friendly. What's most interesting here, and I have to just pivot on you, Francine, amidst everything that's going on in the world, no one is talking about the election in South Korea, right? We had a change at the top in South Korea, and one which is actually more of a conservative shift, one that's pivoting South Korea more toward the U.S., more toward Japan. And certainly, in our opinion, we believe that opens up, I mean, look, the Democratic Party in South Korea has a supermajority there, so it's going to be very difficult for Yoon to get things done. That's probably good for local bonds and might mean less fiscal spending in the near term, et cetera. So we're looking for opportunities like that, opportunities in Asia, opportunities in Latin America.
David, I mean, something that we, again, talk about but actually haven't spent a lot of time on is Ukraine really keeping up with its foreign debt obligations, which a lot of people would have thought almost impossible. It's had to resort to non-traditional methods, for example, some of the war bonds, also involving crypto on the sidelines in order to raise funds to fight Russia. Can you touch on some of the actions taken to date and what more they can do?
Unbelievable, Francine. They actually made payment of $300 million back on the 1st of March on a foreign obligation. But since then, they've raised, I guess, nearly $550 million issuing war bonds. Now, if you're an investor looking at war bonds, good luck modeling it out. I mean, ultra short term, it's really just aid. You're providing assistance. There's no guarantee that you're going to ever get paid back on these bonds, at least in the near term. But nevertheless, the demand for these war bonds out of Ukraine are huge. And right now, bank dealer desks are basically taking them off, repackaging them and selling them on to the end investor. So, we expect that to continue. But on the crypto side, amazingly, $50 million in crypto donations to Ukraine that have already arrived and more to follow. So, Ukraine is pulling out all the stops, trying to raise dollars any which way it can to pay for arms, medical care, and secure communications.
Yeah, and then we have that support from the IMF and also from the World Bank. So, is Ukraine going to be okay in terms of finances?
Well, the interesting thing about it is, forget the finances, Francine. Now with the military moves that Russia's making in terms of blocking off access to the West, the money is of lesser importance, right? How do you get these supplies? How do you get these ammunitions? How do you get things to those that need it most on the ground in Ukraine? I mean, this is the beginning of that part of the fighting, and it's very, very frightening, obviously, and it's something that obviously has our focus far more than Ukraine's ability to pay for the war. It's going to be, how do you get those things that Ukraine needs it most, to the people that need it most.
Damien, if Russia defaults, if corporate bond defaults, or if something else happens, are we sure that it's actually locked in, that it doesn't have an impact on a hedge fund in Asia that then has repercussions for, Europe?
The verdict is out. I mean, there's $41 billion of credit default swaps on the Russian sovereign outstanding versus only $30 billion of bonds, right? So there's clearly a lot of exposure there. Now, a lot of that nets out, and probably by the time this is all said and done, it's not going to be nearly as much. But yes, there are certainly people that are exposed. You saw the story on PIMCO yesterday. Again, it's very difficult to understand exactly who's exposed here, but the writing's on the wall. There's going to be some pretty big exposure, and we expect further announcements similar to what we saw yesterday over the coming weeks.
Damien, thanks so much. Damien Sassower, their Chief EM Credit Strategist at Bloomberg Intelligence. Now let's get straight to the Bloomberg First Word News. Here's Angel Feliciano. Hi, Angel.
Hi, Francine. Bloomberg has learned that President Biden is to call for an end of normal trade relations with Russia. His announcement to revoke trade privileges later today will likely come alongside G7 nations and European Union leaders. If approved by the Congress, the move would allow significantly higher tariffs against Russia than the U.S. applies to other WTO members. European Commission President Ursula von der Leyen is seeking to phase out the EU's dependence on Russian fossil fuels by 2027. Von der Leyen outlined her plan to heads of EU member governments at their informal summit in Versailles. Russia is the EU's biggest supplier of natural gas, oil, and coal.
We will rethink energy. We have to get rid of the dependency of Russian fossil fuels. And for that, we need massive investment in renewables. This is also a strategic investment in our security and our independence. It creates jobs at home, and it is homegrown. We're independent.
Russia has announced an export ban for more than 200 products after being hit by sanctions over the invasion of Ukraine. The restrictions cover items previously imported, including medical equipment, agricultural machinery, railway cars, turbines, and other products. Moscow stopped short of curbing sales of energy and raw materials, the country's most important exports. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Thank you so much, Angel Feliciano there. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Katie Lyons in New York, Anna Edwards here in London. Now, full market move. Also, we look at some of the fallout if there was to be a default in Russia. PIMCO having about $1 billion of serious exposure to Russia. This is Bloomberg.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccines specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This war is just exacerbating trends that we were already seeing.
We need to see how long this conflict plays out and how disruptive the sanctions regime actually is.
The challenge, of course, is what is going to be the lasting effect of the oil prices.
It seems to me that Putin, in poker terms, has gone all in. So he either wins or he loses.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Friday, March 11th. Our top stories today: a volatile week in the markets comes to a close. U.S. stock futures and European equities fluctuate. Meanwhile, Goldman Sachs says the chance of a U.S. recession next year may be as much as 35%. Ramping up pressure, President Biden is set to call for an end to normal trade relations with Russia. That would lead to higher tariffs on Russian imports. And Wall Street is saying goodbye to Russia. JP Morgan has joined Goldman Sachs in pulling back from the country in response to the invasion of Ukraine. Welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London alongside Matt Miller and Kaylee Lines in New York. Anna Edwards is off today. And Kaylee, a calm start to the European and U.S. pre-market session, especially after that turmoil in Asia.
Yeah, it was not a pretty picture in Asia overnight, at least when it comes to the equity market, Danny. Broadly, a down day for stocks. The MSCI Asia Pacific Index was down about 1.7%. The big drag largely was technology. The Hang Seng Tech Index ending the day lower by 4.3%, already a very big decline, and that was well off the lows of the session. It was down by as much as 9% intraday. There is some concern about potential delisting of Chinese companies here in the U.S. after an SEC filing said that several of those companies may get kicked off of U.S. exchanges if they don't comply with certain auditing rules. So that taking that index to its lowest since March of 2020. In other asset classes, I wanted to point to Chinese bonds. We saw the 10-year yield coming in 6 basis points. We are sub 280 on that yield after we got loan data out of China that showed credit growth slowing more than expected in the month of February. And in FX, all Asian currencies are weaker against the U.S. dollar today, but the big laggard is the Japanese yen, actually weaker for a 5th day in a row. Its longest losing streak since going back to September. It's weaker by about 0.7%, and at 116.92, that is the weakest level for the Japanese yen going back 5 full years, Matt.
Unbelievable. I mean, that could be a risk-on signal. The S&P 500 right now up about 0.5%. The Bloomberg Dollar Index also getting bid. Now, this is why maybe the weakness of the yen isn't that telling, because investors have really been using the dollar as a haven. The U.S. 10-year yield rising as investors let go of some of that debt. Not a huge move, but we're just about 199 here, 198.99. And crude, it's up almost 2% today, but only to, and I say only 107.87, because just 2 sessions ago, Danny, we were trading over $125 a barrel. So the volatility here has been obviously something to watch.
Yeah, we've seen points where crude has swung $20 in one day. That by far is the most ever. But yeah, things are a little bit calmer so far today to start the morning. Maybe it's a day to stop and reflect, especially after the ECB and U.S. inflation yesterday. In Europe, we're largely higher by more than 1% when it comes to the DAX and the UK. But another facet of this might just be that there's been so much selling over the past few weeks. Bank of America says that up through Wednesday in that week, $13.5 billion is the amount of dollars that's fled European equities. That is easily the most on record. So selling done at least for today. Now, in some individual stocks, selling is still continuing. ING Group being one of them, the Dutch bank. Now that Goldman and JP Morgan are looking at leaving Russia, which we're going to get in with our Sonali Bosic in just a bit, Bloomberg Intelligence says that Europe is likely next. What does that mean for banks like ING who have high exposure to the region? We're also continuing the story story of assessing an ECB that surprised markets. Yesterday, it was enough to send BTP yields to just 7 basis points from that high reached when the ECB had their initial hawkish pivot back in February. But we are drifting ever so slowly down today, down about 1.7 basis points, but still near that very rich level. Brent crude, much like WTI, as you were pointing out, Matt, up $2% rather, but still off of the highs. And finally, nat gas just flipping to gains. It had been down as much as 8%. This is Dutch front month futures, but now it's up 2%. The optimism had been that Russia left out energy markets from their ban of imports, but again, we're starting to see that flip. Markets getting anxious about the energy story, Kaylee, and what that means for inflation.
Yeah, I think they've been anxious about the energy story for some time, Danny. Now let's take a look at what is ahead today. China's National People's Congress has concluded its annual gathering in Beijing. Meanwhile, if you can believe it, it is the 2nd anniversary of the World Health Organization declaring the coronavirus outbreak a pandemic. Yes, with everything going on in the world, we are still in a pandemic. And of course, EU leaders are wrapping up their meeting in Versailles, France today. They will discuss how to strengthen European sovereignty, reduce dependencies, and design a new growth and investment model, Matt.
All right, very interesting stuff to watch then on this Friday. And we watched last night the U.S. Senate passing a $1.5 trillion spending bill that includes $13.6 billion in security and humanitarian aid for Ukraine. The bill now goes to President Biden's desk for his signature. And Biden spoke on Ukraine support yesterday.
The United States and the people around the world are going to continue to support the Ukrainian people, I believe, as they defend their country. Ukraine will never be a victory for Putin.
Let's get the latest with our team coverage from around the world. Our reporters in D.C., France, Poland, and New York. We'll start with Washington correspondent Anne-Marie Hordern. Anne-Marie, Bloomberg has learned President Biden is set to call for an end to Russia's preferred trade status today. How important is this?
Well, it basically revokes the normal trade status you have of countries that are part of the WTO. And Matt, this is just part of the United States, also the G7 in Europe. Washington is working alongside with to approach this in a multilateral way. And it basically means that any imports that come into the United States, there will be higher tariffs for. So this puts Russia now in a camp of the likes of North Korea or, say, Cuba. We should note that the president cannot unilaterally do this alone, but already there is a lot of talk on Capitol Hill from Democrats and Republicans that they, in fact, wanted to make this move anyway. So the president will be announcing this in the 10 o'clock hour. It's just more penalties to come from Russia as that invasion continues.
All right, Anne-Marie, thank you very much. That's Bloomberg's Anne-Marie Hordern in Washington. Now to Bloomberg's Maria Tadeo joining us with the latest from Versailles in France, where the EU summit is taking place. And Maria, President Zelensky had said that he wanted EU membership to come out of this summit. Is there progress being made towards that?
Well, Danny, remember, President Zelensky said he wanted to be fast-tracked into the European Union. The Ukraine aspires, and by the way, this is in their constitution, to join the European Union. What the Ukrainians argue is that we've been fighting like hell for 2 weeks. This is a monumental effort that the country has made, so therefore we deserve to be fast-tracked into the Union. Now, yesterday, European leaders were here until 2:30 in the morning. They did agree on language that says Ukraine belongs to the European family, but there is no explicit mention to this fast-track application. Of course, some leaders argue that at this point it's unrealistic. The country is literally at war. Now, the other thing that I would point to, Danny, here there is an active debate on sanctions. There's also about weapons. But really, the fundamental question for leaders today is there even a diplomatic solution to this? And I should note that pretty much every Eastern European leader that I've spoken with in the past 2 days tells me they're growing pessimistic, that there is no diplomatic way in sight. The issue right now is that Vladimir Putin faces a war that he cannot win on the ground. There's huge resistance from the Ukrainian people. If he can't have it, he's going to destroy it. That is their take on this. So again, it makes the negotiations going forward very, very tricky between the two sides.
All right, Bloomberg's Maria Tadeo in Versailles. Thank you for your great reporting throughout the week. Now let's get to the latest from the Poland-Ukraine border. Bloomberg's Tom McKenzie is on the ground there. Tom, we understand that overnight 2 cities in western Ukraine were hit by airstrikes that hadn't previously been targeted. How could that exacerbate the flow of refugees over the western border where you are?
Well, Kayleigh, we've heard that 40,000 civilians in Ukraine have managed to use those humanitarian corridors to evacuate cities from those bombardments. We know as well, though, that, as you say, in the south of the country, particularly around Mariupol, that port city continues to face bombardment and is, by all accounts, facing a humanitarian crisis. And as a result, the refugee flows continue. The top-line numbers for the United Nations, now 2.3 million refugees have fled Ukraine across into countries like Poland, Hungary, Slovakia. But it is Poland, here where I'm standing on the border with Ukraine, that's taking the bulk of those. 1.5 million refugees now into Poland, a population of 38 million. And we continue to see them. The lines behind me, hundreds of people crossing, again, mostly women and children. And then the importance of this, linking this, the direct linkages between the suffering here in Ukraine to the policy making in Brussels and in Washington, the human stories here, the proximity of this battle, the fact there's no guarantee that at some point it won't cross this border. And that seems to be underpinning the kind of decision making we've been hearing about from Maria and Anne-Marie, of course. A personal story, I was speaking to one mother, Anna, with 2 children, a 6-year-old coming from Kyiv. Half the population there has now fled, according to officials. She says she wants to see a no-fly zone instilled in Ukraine. She wants to return with her 6-year-old when the country is safe so that he can see his father again and go back to school and have pizza with his dad, who's now probably going to have to take up arms to fight the Russians.
All right, Tom, a lot of dramatic and really tragic stories there coming from the border. We hope that everyone gets support that they need. Goldman Sachs and JP Morgan are joining the corporate exodus from Russia now in response to the invasion of Ukraine. Let's get to Shonali Basak, our Wall Street correspondent, for more. So, Shonali, how difficult is it, we've been talking about this for a couple days now, to unwind from Russia?
On one hand, a lot of these banks have fairly limited staffs there, retreating quite a bit from 2014. But on the other hand, they are still making markets in these businesses. So Goldman Sachs, which has the most aggressive language, saying they will do a full withdrawal with about 80 staff there, they are still making markets. They were clear, however, to say they are helping clients reduce risk and not seeking to speculate. We also had news overnight that Morgan Stanley is considering moving some of its 20-strong-based Russia staff to the Gulf state and other financial centers. Remember, these were 3 banks, Goldman, Morgan Stanley, JP Morgan, that in 1998, there were stories about bankers tripping over themselves to help with the sovereign debt crisis at that time. It's been a decades-long entrance into Russia and now a very blunt retreat.
Shonali, what else are your sources watching as this unfolds, as more banks join this choir saying that they're going to leave Russia?
Yeah, it's interesting, Danny, because on one hand, you have some of the transactions that they have to unwind with counterparties such as VTB, where not only is the unwinding difficult when it comes to sanctioned entities, but also difficult when it comes to figuring out what the price of the underlying securities are. So unwinding trades is of critical and most immediate notice. But then if you look on Wall Street on the client side, they're not looking at just Russian debt and seeing what's happening. They're looking at the entirety of emerging markets as well and seeing what opportunities there are on things that might have sold off on the sidelines. There are some that are still debating whether they want to buy Russian debt or CDS. The other thing that is really important to watch here, I think, is how at the whim of geopolitics a lot of these banks feel. They're not only closely watching Russia, but they're also closely watching China and Saudi Arabia to see how the Biden administration's relationship starts to evolve over time as they maneuver a lot of these geopolitical tensions.
Yeah, a tricky global landscape to navigate. Thank you so much to Bloomberg's Shonali Basak. Now let's get back to the markets and take a look at some stocks moving in pre-market trading here in the U.S. I'm sorry, Danny, I know you hate it when I talk about 3 down movers, but we have 3 massive declines for 3 individual stocks today. One is Rivian, of course, the electric pickup maker. Its revenue missed expectations. It had a wider loss than expected, and it's not going to be able to produce as many vehicles because of supply chain issues. As a result, that stock is down 11.5% after earnings. It's another big downside mover after earnings for DocuSign. This is the electronic signature company. Its revenue guidance missed expectations. That stock down 19% as a result. And the final double-digit downside mover, DiDi Global. This is the Chinese ride-hailing giant. It was expected to delist in the U.S., relist in Hong Kong. Bloomberg reporting overnight it has now halted that Hong Kong listing that was expected due to issues around that cybersecurity probe. Apparently, it hasn't been able to meet what regulators were desiring. As a result, that stock down about 15% before the bell, Danny.
I will flag to our viewers that S&P 500 futures are up 0.5% in case you too feel bummed by 3 consecutive down movers. Kaylee, thanks. Well, coming up on the markets, we're going to continue the conversation with Karim Chadid, BlackRock investment strategist, as we look at the turmoil and the wild ride of this week, plus more on the war in Ukraine with Ola Onyok, senior lecturer in politics at University of Manchester. This is Bloomberg.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Big things are happening on Bloomberg in March. First, Bloomberg Triple Take, breaking down the day's biggest stories.
Today's Triple Take focused on the energy transition.
Then, the return of Bloomberg ETF IQ.
The last major holdouts of the ETF revolution.
And the debut of Bloomberg Crypto.
The CEO of Binance weighed in.
Finally, David Rubenstein brings you insights and advice from the world's greatest investors on a new season of Bloomberg Wealth. All this March, right here on Bloomberg.
Welcome back to Bloomberg Surveillance. This is the early edition. We are simulcast on Bloomberg Radio and Bloomberg Television. I'm Matt Miller here in New York with Kaylee Lines. Danny Berger is with us out of London. Now, we had a monster inflation number, a monster CPI number out yesterday, 7.9%, a fresh 40-year high. But that hit before the spike in oil prices, or it didn't include that. I have a great breakdown here. Those of you watching on TV can see this. Those of you on radio, I'll walk you through. What we're looking at is headline number of 7.9%. That comes 2.5% from services, 2.5% from goods, but only 1% in change from food and 1.6% from energy. That's going to change drastically. So inflation is likely going to be much higher the next time we look at a reading. Bloomberg's Eddie Vanderwalt joins us now from the MLive team to talk about, what this means, Eddie, because we have everyone downgrading growth forecasts, Goldman Sachs chief among them, but also the ECB, and inflation that looks like it hasn't topped out yet.
Dare we say it, Matt? Stagflation's on everybody's lips at the moment, right? I think that, and you've hit all of the right points here. The problem for the Fed and for other central bankers is that they can't control an oil spike, right? They can't control high energy prices. This is something that is generally seen as outside of their remit, and they usually try and look through these things. But those things feed through They feed through into food prices and other things. And we're now seeing wheat and all of those, really hard commodities pushing higher, and that's going to keep adding to this pressure that we've seen over the last couple of years. It's a really difficult problem for the central bankers to solve at the moment.
Well, as we try to wade through these central bank decisions, Eddie, I'm kind of scratching my head on what the euro did, because you get this initial spike up after the ECB decision that's more hawkish than expected, and then just kind of drifts downward. What do you make of that?
So I think there's two factors at play for the euro at the moment. Of course, the ECB came back a little bit more hawkish than people were expected. So, that initial reaction is fair enough. But then if you listen to the ECB is quite bearish about the Eurozone and saying, yes, growth is strong now, but they're also talking about how Ukraine was a watershed for the Eurozone. And I think that's a problem because that spills over into a haven demand, and the dollar is the ultimate haven at the moment, and I think that's what accounted for the turnaround.
All right, so you're talking about actual fiat currencies. Eddie, can I just get your thoughts on cryptocurrencies? Bitcoin right now hanging around $39,000, essentially exactly where it was last Friday. What do you make of the action that we're seeing in Bitcoin?
It's a really interesting environment for Bitcoin because, of course, a lot of Bitcoin investors have been talking about exactly this sort of environment where the US dollar becomes, unfriendly towards Russia and other central banks. And that, talking about whether those central banks might want to diversify into cryptocurrency. We haven't seen any move along those lines. And I think that accounts for some of the negativity that we've seen in Bitcoin. But also, Bitcoin still... it's not a haven at the moment. It is acting as a geared play on high beta tech stocks. And I think that's how it should be treated. And while tech is under pressure, Bitcoin will remain under pressure.
All right, we'll leave it there. But thank you so much for joining us, Eddie Vanderwalt of Bloomberg M Live. And speaking of crypto, don't miss Bloomberg's new weekly show, Bloomberg Crypto, hosted by Matt and me. The first show will be debuting on Tuesday, 1 p.m. New York time with billionaire crypto investor Mike Novogratz. Don't miss it. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lines with Matt Miller in New York and Danny Berger in London. Anna Edwards is off today. Now let's keep you up to date with news from around the world. Here's the first word. A new study says that the global death toll from the coronavirus could be 18.2 million. That's 3 times higher than official records suggest. The study from the University of Washington points to a lack of testing and unreliable data to explain the discrepancy. President Biden presented an optimistic vision of the Democratic Party's chances in November's midterm elections. The president told the Democratic National Committee that the party's economic message resonates. But Democrats will have to fight off Republican claims that those policies have led to the inflation that's cutting into Americans' purchasing power. The International Monetary Fund no longer sees a Russia debt default as an improbable event. IMF Managing Director Kristalina Georgieva says that it's not that Russia doesn't have the money, it's that Russia can't use its money. Unprecedented sanctions will make it difficult for Moscow to convert its IMF reserve assets into currency. And Major League Baseball and its players' union have said, play ball. The two sides reached a tentative labor agreement that ends a 3-month lockout and paves the way for the start of the season next month. The deal averts a potential disaster for a sport that was already coping with the loss of TV viewers. So good news, Danny, there's no more crying in baseball.
There's always crying aloud in baseball, Kaylee. Well, as we look at a market that's made many people cry with the volatility reaching levels not seen since the COVID sell-off, we're going to dig into it with Kareem Shadid, BlackRock investment strategist. This is Bloomberg.
almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Lama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance, the early edition. Here's what you need to know. A volatile week in the markets is coming to a close. Investors have been going back and forth between panic selling and dip buying. They're bracing for a likely interest rate hike by the Fed next week. At the same time, Goldman Sachs says the chance of a U.S. recession may be as much as 35%. President Biden is set to ramp up the pressure on Russia. Bloomberg has learned the president will call for an end to normal trade relations with Moscow. That would clear the way for higher tariffs on Russian imports. It's up to Congress to make the final decision on the matter. And JP Morgan and Goldman Sachs are leading Wall Street's retreat from Russia. JP Morgan says it's currently engaging on limited activity there. Only Goldman has said it plans to close Russian-based operations. I'm Danny Berger in London, in for Anna Edwards with Matt Miller and Kaylee Lyons in New York. And Matt, today just feels very, very calm compared to the rest of the week we've had.
Yeah, calmer than you are, dude. We're looking at futures that are up about 0.5%, but yeah, not a lot going on in terms of, we have a little bit of a bid for the Bloomberg US dollar index right now at 1,200, unchanged completely on the 10-year yield, so 198.64. They're relatively high level still, but just not a lot going on. 4 hours away from the open, I should point out, so a lot can happen. Crude is up, but only 282 at 108.84, and on Wednesday we're up above $125 a barrel. So we've seen some massive swings compared to this. It just is relatively chill right now. Kaylee, what are you seeing in terms of pre-market movers?
Danny, he called me Kaylee. I guess I'm not dude. You are dude. In terms of pre-market movers,
I am the dude.
What's moving to the upside? You are getting a lift for some of those travel stocks once again. The likes of United Airlines, Carnival Cruise Lines, they're each higher by around 1.5 to 2%. But some big movers to the downside. Some of them earnings related, some of them not. On the earnings side, Rivian reported after the bell yesterday, revenue missed expectations, wider loss than expected, and its production not going to be where the company was hoping it would be this year due to supply chain challenges. So that stock is down about 11%. And down 14% is DiDi Global. That's the Chinese ride-hailing giant, halting its plans to list in Hong Kong due to that cybersecurity probe ongoing with regulators. So that stock sinking 14% before the bell, Danny.
Kaylee, I'm just trying to find my inner zen right now after Matt told me I have no chill. So I'm going to be very chill for this market check. We are seeing European stocks move higher as we go through the session, up more than 1%. It's interesting to look at some of the single names gaining, Wizz Air being one of them. Wizz Air has lost about a quarter of its value since the war broke out. There's this concern over higher oil prices, but HSBC out with a note upgrading Wizz Air, not saying because the fundamental story has gotten better, but essentially saying it's sold off so much that you can kind of just hold it now. You don't have to keep pressing that sell button. BTPs have been fascinating. Yesterday, we had this big spike up in yields following an ECB decision that was much more hawkish than many expected. We're coming back a little bit, about 2.5 basis points, but we're still around 9 basis points from the high that was set in February. And finally, natural gas flipping from this morning's session. It was down as much as 8%, up yet again for 6.9%, but of course around 7% is kind of nothing, Kaylee, compared to some of the double-digit moves we've seen on natural gas in Europe.
Yeah, volatility has definitely been the name of the game, Danny. So let's talk more about these markets. Joining us now is Kareem Cheddid, investment strategist at BlackRock. Kareem, I actually want to begin with the call we got from Goldman Sachs overnight that the U.S. economy could be heading for a recession next year, that probability as much as 35%. How do you view the potential growth hit from the crisis in Ukraine and the resulting sanctions, the resulting impact on energy prices? Is that something you can even really model at this point?
Thanks. Yeah, I think there's two aspects to that impact. The first.
Hello, traders. How are you doing today? Are you ready to trade Bitcoin? I am placing an order to buy Bitcoin. The price I'm looking to buy, 38,968. Please place your order at 38,968. It's about right here. I will adjust this line. 38,968, and wait until it will get filled. Okay, if you want to get the strategy, please go to companyi.co.uk. Otherwise, you can stay with me and copy this trade and wait until my further instructions, what I'm going to do next. It's still a little bit away from the price because these days the price kind of moving up and down very, very fast. So I need to put the order to buy before it will get filled. Maybe I will have to wait for quite a while. Okay, so stay safe. Have a nice Friday, and let's hope it will get filled very soon. Stay safe, guys.
We're starting to see a pickup in preference in ETF flows towards US equities, towards quality equities, as a reflection of that.
Would peace be a surprise, Kareem? I mean, if we got some way for Russia to back out and try and put things back to normal, would that surprise markets?
I would point to gold. Gold is very much a safe haven trade. And if you look at the way that gold has been performing, there is an extensive risk premium attached to the gold price with regards to political risk. So to answer your question, I think there's a lot in the price already from a political risk perspective for markets, and gold is a reflection of that. It's trading above fair value. So there's room for that to unwind if we have any any positive surprise, to use your words, on the political front.
All right, Kareem Chedid of BlackRock, thank you so much for joining us today. Just want to get to some breaking news quickly as it regards the Iran nuclear deal. The EU's Borrell now saying that those Iran nuclear talks need a pause, saying that that is due to external factors. Something tells me the war in Ukraine and the sanctions on Russia have a little something to do with that. We are seeing WTI futures at session highs on the back of those headlines. Right now up a little more than 3%, trading at 109 a barrel. But remember, we closed Monday at 119, so we are still well off those highs of the week. Now coming up, we will talk more about geopolitics and the war in Ukraine. Olga Onuk, senior lecturer in politics at the University of Manchester, will be joining us next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
It is a war crime. It's very clear, and Russia is denying it. But we have seen such horrible pictures also in the recent history. Vukovar, remember Sarajevo, and the same denying and the same propaganda going on. But I think that we shouldn't tolerate this. We have to do much more than we are doing now.
That was the Prime Minister of Slovenia there speaking to Bloomberg earlier today. Well, let's get more on the war in Ukraine with Olga Onuk, senior lecturer at the University of Manchester. Olga, thanks for joining us this morning. And a lot of the work you do focuses on the people of Ukraine, attitudes, their surveys. Over the past 14 days, how has the Ukrainian feeling, the attitude towards the war changed?
Well, it's everything that I think Western analysts did not predict, and certainly Putin did not predict. The resolve and resolute nature of Ukrainian civic identity and attachment to homeland and state is only growing stronger. So I have some fresh data from March 9th that came out on March 10th. And we see that 91% have hope and faith that Ukraine will prevail in this conflict. Of those that were surveyed, 97% tell us that they will remain in country. 39% are already volunteering towards the war effort, and about 37% are donating whatever funds they have at home. So we're seeing the continuity of just everyone binding together and contributing to the war effort in Ukraine. Again, not what we perhaps, or some of us in the West might have expected.
And Ukraine, we heard yesterday from the foreign minister that Russia essentially said the attack will continue. They want Ukraine to surrender. Ukraine says that it will not. if there is a fundamental disagreement about what would bring peace, territorial disputes, when Ukraine says it's not willing to cede an inch of territory, is it possible for a diplomatic solution to be reached?
I think it is possible for a diplomatic solution to be reached. I think Zelensky's government has really demonstrated the capacity to engage in good faith in negotiations, something that many people also did not think would happen. And I think they do have in their own group, they have an understanding of where negotiations might be going, where they would be willing to compromise on. These are obviously things that are not going to be made public in any way. But I do think if the Russians come to the table asking the exact same thing, when they are in fact tactically losing a series of conflicts around the Ukrainian territory, where they are losing the hearts and minds of any Ukrainians in the east of Ukraine, any Russian speakers in Ukraine, and quite frankly, fresh data out of Russia shows some decline in support for the war effort on the Russian side. We're seeing some Russians reporting interesting things there.
Okay, so if you have declining approval at home, you have declining approval in Ukraine, the military is not performing, sanctions are being rained down upon Russia, what position does that put Vladimir Putin in? Is he going to have anything else to lose, and does that make him inherently more dangerous?
I think Vladimir Putin has shown us that he is dangerous. I think any Western allies or partners that thought that Putin specifically, if not Russia, were someone that you can work with, that was reliable, they have been shown very demonstrably that that is not the case. But I think should the conflict go as it is, should the war and invasion go in this very slow step, I think Russia will likely try to escalate, will likely or potentially use other types of weapons, including different types of tactical weapons, as well as potentially chemical warfare. This would be horrific. This would be tragic. The consequences of this would follow Putin and his Kremlin insiders and their extended families that are now in safety abroad for years to come. This would not go unpunished.
So, the concern that Kaylee, had and that I had this morning is just that it seems like we've gotten to a point where Russia's invasion of Ukraine is irreversible. There's no way to pull out. There's no exit. And especially as, President Biden has come out and the U.S. has come out as extremely aggressive. Not that that's not warranted, but, it seems more dangerous this way. Is that the wrong take?
Again, I don't think it's more dangerous. I think it's as dangerous as it always was. Perhaps some people were miscalculating the level of threat and danger. But I do think there are so-called off-ramps for Putin. Even
Okay, traders, I'm going to place order a little bit higher at 39,000. I want to buy at this price, Bitcoin. So, order placed, order changed. So if you want to trade, please change your order to buy at 39,000. Okay, and that's it. Stay safe, and I'll speak to you later. Okay, guys.
Away from Abramovich.
it's not clear how much actual pressure oligarchs can put on Putin himself, but they might be able to put pressure on other Kremlin insiders that might either nudge Putin in a different direction or themselves, in fact, try to take power. So I think when it comes to oligarchs, they are very much still reliant on the state, reliant on being in Putin's good favor, but they do have other abilities to put pressure on other individuals that we've heard some of these rumors coming out in the last week, and that is very much possible.
Olga, thank you so much for joining us this morning. Really fascinating stuff. Olga Onyuk, Senior Lecturer at the University of Manchester. Well, coming up in the next hours, the conversation on Ukraine and Russia continues. Gallup Editor-in-Chief Mohammed Yunus joins the program. That's at 6:30 a.m. in New York, 11:30 a.m. in London. This is Bloomberg.
airport, and behind me you can see SpiceJet 737 MAX aircraft. That Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Danny Berger in London. Anna Edwards is off today. Very much in today, though, Tom Keene, co-anchor of Bloomberg Surveillance, who joins us now. Tom, it's been one of those weeks that's felt like a month. So much has happened from CPI to the ECB, volatility in commodities. What are you looking at today?
There's any number of stories today. We're going to cover them across 3 hours this morning, and then I believe there's a bonus hour later, and then a bonus hour with John Farrow this afternoon. And with all that is a global Wall Street uproar. And this is over the closing of the London Metals Exchange. I'm not going to go into all the details now, but the chart speaks volumes. Nickel, normal. Nickel not up to $100,000, the circle up top, coming down to normality, and then it flatlines. And it flatlines because the LME, as they did in 1985 in the so-called tin crisis, shut down the exchange. There are three parties. There are the physical goods people, which is who LME is defending. There are those long and there are those short, depending on the trade. In this trade, short was benefited and longs got absolutely crushed, those betting on nickel higher.
I've also noticed that the perception is a lot worse than the data, Tom. Yesterday we had a story, and I know you have Mohammed Yunus on from Gallup, which is why I bring this up. Yesterday we had a story that low-wage earners think that their salary isn't keeping up with inflation, but the data shows that it is, at least over the last 2 years since the pandemic started. I also thought when I saw Goldman's forecast today, only 35% chance of a recession next year, I thought, man, that seems low.
I don't agree. I think that the Goldman shift is a shift that we're going to see many, many times over the weekend. I actively await Michael Feroli's publication this evening of what J.P. Morgan believes, and of course Ellen Zentner, Morgan Stanley, and the rest. And I'd suggest, Matt, this is the beginning of the markdown on growth. And as I've emphasized the last number of days, within all the market dynamics, it all falls back to growth. And I would suggest the growth dynamic in Europe is more critical even than in America.
Well, in America, Tom, I do wonder how higher oil will play into the consumer story if that starts to shift even more severely as it filters through.
That's why we have such negative perception.
Well,
yeah.
I would suggest that we've got stasis here at 111, which is somewhat within the range of where we were 6, 7, 8 years ago. And that's down from the panic of a number of days ago, but this story's long from over. And the effect of it is tangible to a huge body of Americans.
Certainly is. Tom, thanks so much. It's Tom Keene, co-anchor of Bloomberg Surveillance, who will be back on the program in just a few minutes. And Kaylee, look, this is part of it, is that these markets have been so volatile and they're more calm today, but it seems that volumes are off. I don't know how much we can really trust the calm and that it will stick around.
Yeah, maybe volumes are down because everyone's just exhausted from trading this week because it's been wild and it's really across asset classes. You're seeing it in the bond market, you're seeing it in the equity market, even more so in commodities. Tom was just speaking to that. I mean, I'm taking a look at oil, even just shy of 110, actually just breaking through 110 on WTI on the back of some of those Iran nuclear deal headlines, maybe putting a pause on that, which would put a pause in theory on supply coming back onto the market. Even at 110, Matt, that is still well off the highs of the week. WTI on Monday was at 119.
True, but that's no longer calm. I think when we're seeing now 3-4% moves in oil, and I guess we're at session highs right now. So I would say this is something to watch as we get closer and closer to the start of trading on Wall Street, just 3.5 hours to go. Otherwise, I think, it's really the gas prices, Danny, you pointed this out, that make perception so bad. And I wonder if that negative perception, moves us into the recession. I think 35%, I felt like we must have a 50% chance of a recession next year.
Yeah, well, this is something Danny Blanchflower talks about all the time, right? How important consumer sentiment is. But just in terms of sentiment, Kaylee, the flow show from Bank of America, I was dumbstruck. 13.5 billion pulled from European equities. That was double last week. Last week was a record, so this record is just no one wants to be in European equities right now.
Yeah, absolutely brutal when you look at that flows data. On the subject of sentiment, I would point out at 10 a.m. Eastern time, we're going to get University of Michigan consumer sentiment data. That will be a very, very interesting read, especially the inflation expectations within that. So shameless plug, I'll be breaking that down with Guy Johnson at 10 a.m. Eastern, Danny.
Well, I, for one, will tune back in for that. Those inflation expectations are always fascinating. We'll have a lot more interesting conversations ahead. Bloomberg surveillance continues. We're going to hear from Bruce Kassman, JP Morgan chief economist, and Amy Wu Silverman of RBC Capital Markets, among others. This is Bloomberg.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
This crisis has certainly put a few legs of support under the inflation risk scenario.
It isn't just oil that's rising, it's natural gas, it's food, it's metal.
The ability for central banks to control inflation in this environment is certainly a question.
Knowing where that line is between doing enough to slow the economy and doing so much that you overdo it is very, very murky right now. We can endlessly debate what the terminal rate is going to be, but it's got to be higher than where we are.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures up a half of 1% on the S&P TK. Here come the downgrades on Wall Street.
Well, we're going to see the downgrades on Wall Street. There's so much to talk about with the horrific story in Ukraine, but that's right, John. Finally, we're beginning to see the growth adjustments. I'll let you go into the Goldman Sachs details, but I would suggest many more this weekend. I will be riveted at 7 o'clock tonight to see what Michael Ferroli and JP Morgan do. Bruce Kasman to join us on Surveillance this morning.
Looking forward to that. 3 points from Goldman and Jan Hatzius. Tighter financial conditions, lower consumer sentiment, and slower growth in Europe. That means 175, Tom, for growth in America for 2022, down from 2%.
It's the markdown. I'm going to cut them some major slack. I mean, there is a war going on, and there's some outside adjustments here as well. But to your point, John, I would mention and look back yesterday to the real struggle in Europe is their financial and debt construction, given a substantially lower growth model than what we see in America.
And on the punishment for the Russian economy, Lisa, the president is not done. We hear from him a little bit later this morning.
What more can he do, and how much does he try to dovetail the message, as you pointed out yesterday, into this being the reason for the inflation rate being the highest since the early 1980s? How much does he say this is the reason we're all absorbing higher costs to offset this war and end the Russian incursion of Ukraine? How much can he actually do that, considering that this was really coming into this already very high?
According to our reports as well, Lisa, this morning, a suggestion that he opens the door a little bit later to higher tariffs on Russian imports.
What will that actually accomplish? I mean, honestly, how much does he dovetail, again, this message of this is Russia's war, this is the reason we're seeing inflation, this is the reason why gas at the pump is rising so quickly, versus, you know what, we had a highly inflationary environment before this even began.
The Europeans, Tom, there was hope for a deal with Iran to offset some of this oil issue, this energy issue. An EU diplomat just announced a pause in the Iran nuclear talks. What did you make of that? Came in the last hour.
There are these marginal debates. I don't make much on the Iranian thing because I'm, to be honest, John, not up to speed on it because of its immense complexities. We've got the distraction in Venezuela. That's interesting. Guess what? The elephant in the room is in Saudi Arabia, Riyadh, and maybe over to Dubai and Abu Dhabi and United Arab Emirates. Maybe they can move the needle there, maybe not. I got oil at a point where Joe Biden loses, 113 a barrel, Brent crude.
Futures right now up a half of 1% on the S&P. Let's whip through it for you. On the Nasdaq 100, we look a little something like this. We're positive 0.48%. Into the bond market, yields in and around 2% at 197.94. And if I told you at the weekend we'd have a week of losses on crude, would you have believed me, Lisa? The biggest weekly loss of the year so far.
Honestly, I don't know what to believe when it comes to the crude space. I mean, we did see oil prices tick higher after that Iran news. What's the marginal production here? What's the outlook going to be, and how long could this potentially persist? All very much open questions. Today, it's the second day of EU leaders meeting in Versailles. We're going to get the latest from Maria Tadeo. Curious to hear what they say with respect to how much to increase their defense spending, as well as what they talk about in immunizing their infrastructure from Russian supplies. This has to do with gas. This has to also do with wheat. How do you deal with that? Then at 10 a.m., this to me is the data point of the day. University of Michigan sentiment survey comes out. We already have seen it fall to the lowest going back to 2011. This will be the first read on what the post-Ukrainian war sentiment really is. How much has that seen a further deterioration in how people feel, especially as real wages fall to around the lowest, some of the lowest levels that we have seen in data going back to 2007. This is because the inflation is outstripping how much wages are increased. And as you mentioned, John, at 10:15 a.m., we do hear from President Biden talking about additional measures that the U.S. may take to hold Russia accountable for the Ukrainian war. And really, to me, how much does he really discuss the need for Americans to take on the extra costs to end this war and sort of blame Putin for the fact that inflation expectations are steadily rising, with the 5-year inflation expectation based on break-even rates rising to the highest in data going back
back more than 2 decades, about 3.5%, John.
Do you think the Putin gas hike phrase is catching on?
Honestly, no. I think that there is a sense that this is very much due to the acceleration is due to this war, and certainly the oil and gas concerns are due to that. However, if you look beneath the headline in yesterday's CPI, it's rents, it's healthcare, it's all sorts of other costs that are very much driving this as well.
It's stickier, and it's going to be with us for a whole lot longer. Lisa, thank you. Team coverage begins right now with Bloomberg's Anne-Marie Jourdain in Washington, Maria Tadeo in Versailles. Anne-Marie, let's start right here, 10:15 Eastern, the President of the United States.
Yeah, and what he's planning to announce is more penalties directed at Russia. And you guys mentioned it already. This is basically taking Russia away from that normal status of a trade partnership. It puts in the likes of Cuba and North Korea. We should know this is a Bloomberg scoop from Jenny Leonard overnight, really setting the precedent of what the president is going to say. And also, there potentially means that this is going to take similar action at other G7 countries and the European Union. And if it was to do that, it would be much harder for Russia because they are so much more reliant on that trade with Europe than they are with the United States.
Anne-Marie, what will this actually accomplish?
Very much so for the United States. I think it's a little bit more symbolic, given the fact that I think it's about 5% the IMF data puts on that Russian trade into the United States. But we should note, it just shows that Washington and capitals around Europe are not stopping when it comes to penalizing the Kremlin and the individuals around him and the Russian economy. So this just shows that as that invasion continues, they are willing to take every single step to punish President Putin and the Russian economy.
Maria, today, the single item this morning is the move west in bombing of airfields. There's a town to the south of Lviv, and then there's one to the north, the very famous Luck, L-U-C-K, out of World War II, or Lutsk as it's called now. It's 94 miles to where people like you have their cameras set up. What is the significance of the bombing of those airfields this morning?
Well, Tom, it's very close to Poland, and Poland is a NATO country, but it's not just that. You can see the message that the Russians are trying to send here. One is that this war from the air is going to get very ugly, but two, and this is really the key, is a warning. If you send weapons to Ukraine, then Russia will retaliate, and this is really what it comes down to. The Ukrainians are begging for weapons. They say, we get it. NATO's not going to fight this war for us. We're going to have to fight it on the ground, but we need the weapons. And guess what country is right now the big hub point for weapons delivery? Well, it's the Polish, and this is why they're moving so close to the Polish border. But Tom, I should note this is a major escalation if they move ever so close to the Polish border. I spoke with an Eastern European official, and he told me the situation right now, this is not about the sanctions, it's not about the energy, it's not about the economic fallout. The question right now is there even a diplomatic solution to this? And many Eastern European officials, but also leadership, they believe there isn't a diplomatic way out. Putin cannot have Ukraine, so what he's going to do is what he did in Syria, just destroy it.
Maria, take us inside Russia right now. We also saw reports this morning that on Russian state TV, the action of this president was criticized openly. It was called Afghanistan, but worse. What is happening?
Well, first of all, it's very difficult for Russians to get a clear picture of the situation because everything is banned. You can't really say war on TV. Anyone who tries to criticize us immediately gets pushback. And to answer your question very directly to that criticism, Vladimir Putin came out this morning and said anyone who criticizes Russia or is embarrassed to be a Russian citizen is not really a Russian. A real Russian will never be embarrassed of belonging to this great country that is the Russian Federation. The other thing that I would point, and this is also very key, is that Alexander Lukashenko, the head of Belarus, is on a flight to Moscow. What it means is that Belarus can now get actively involved in this war. Vladimir Putin, we also know that he's now said, if you're outside of Russia but you want to fight for Russia, you can. What it tells you is that this war is not going well for the Kremlin. It's day 15. This is costing a lot of money. The country is facing a default. And then, of course, pressure from Russian mothers, and we've seen that on TV, saying, where are our kids? Where did you send them? Why do we not hear from them? And a very real situation that actually what Russian TV tells you that this is going according to plan and nobody's dying is not the reality.
Maria, great work as always. Maria Tadeo alongside AMH, Anne-Marie Jourdain down in Washington, D.C. Tom, are cracks emerging domestically in Russia?
Well, yeah, I'm glad you brought it up, John. I think the cracks are there. We're going to find through an eventful weekend. I would really emphasize, John, with all the distractions of our economics, finance, and investment, that this is a war in real time. I've been very distressed at the partition between the European newspapers and the Western, the American newspapers. I give Bloomberg very great credit for running our operation out of London and Europe. This is a war in real time, including the bombing of those two airfields reported overnight in so close to Poland, Western Ukraine.
And more companies are pulling out, Lisa. This is what Medvedev had to say yesterday out of Russia. This quote: "The Russian government is already working on measures that include bankruptcy and nationalization of the property of foreign companies forced into exiting." I don't think we've fully realized what's about to happen here domestically in the Russian economy.
Well, and one of the biggest and wealthiest individuals in Russia came out actually criticizing Putin, saying that stop trying to completely eliminate your part as part of the world economy. How much, though, are companies going to continue and, frankly, accelerate this exodus as Russia kind of pushes them out also because they don't know what their liability is going to be on the ground either direction?
And the feedback into the U.S. economy. So we worked through the Goldman note, tighter financial conditions, lower consumer sentiment, the issues around European growth, higher inflation too at home here in America because of what's happened with oil and gas prices. Wells Fargo say this morning, literally just minutes ago: "We have raised our forecast even higher for CPI this year. Despite the uncertainties created by the war, we look for the FOMC to raise its target range for the Fed funds rate by 150 basis points, Tom, over the course of this year." The Fed next week.
Wow, fold that into the politics of Washington and the politics of this moment, John. Wow.
Looking forward to catching up with Chris Harvey of Wells Fargo in the next hour on this equity market. Futures up 0.5% on the S&P and on the Nasdaq too. Yields unchanged, 198. Crude with a bounce, up a little more than 3.5% at 109.82.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. President Biden is set to call for an end to Russia's preferred trade status today. The move would clear the way for increased tariffs on Russian imports. The president can't unilaterally change Russia's trade status because that authority lies with Congress. Both Democratic and Republican lawmakers have called for suspending normal trade relations. The U.S. Senate has passed a spending bill that includes $13.6 billion in security and humanitarian aid for Ukraine. That was part of the $1.5 trillion measure that will keep the federal government in operation for the rest of the fiscal year. Federal agencies will see a 6.7% increase. The bill now goes to President Biden for his signature. And world powers and Iran suspended their efforts to revive that 2015 nuclear accord. That's reigniting a crisis that's likely to lead to a spike in oil prices and in Persian Gulf tensions. A top EU diplomat says negotiators have failed to bridge major differences. The two sides had been close to salvaging the agreement. And a new study says that the global death toll from the coronavirus could be 18.2 million. That's 3 times larger than official records suggest. A study from the University of Washington points to a lack of testing and unreliable data to explain the discrepancy. The British economy unexpectedly rose in January at the strongest pace in 7 months. GDP increased 0.8%, beating levels prevailing before the coronavirus struck. The numbers may lead the Bank of England to raise interest rates for a 3rd time next week to control inflation. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Big things are happening on Bloomberg in March. First, Bloomberg Triple Take, breaking down the day's biggest stories.
Today's Triple Take focused on the energy transition.
Then, the return of Bloomberg ETF IQ.
The last major holdouts of the ETF revolution.
And the debut of Bloomberg Crypto.
The CEO of Binance weighed in.
Finally, David Rubenstein brings you insights and advice from the world's greatest investors on a new season of Bloomberg Wealth. All this March, right here on Bloomberg.
We need to be honest with the American people. The battle for freedom has its cost here at home as well. People are already feeling Putin's price hikes at the pump. As painful as the price is today, the costs are going to be higher if we do not act now to deal with this tyrant.
The President of the United States from New York City this morning. Good morning. Futures up 0.4% on the S&P. On the Nasdaq, we're positive too, up 1/3%. When do we hear from the President, Lisa? A little bit later.
Yeah,
10:15. 10:15. The President of the United States. We'll take that one for you when he appears, which may well be later than 10:15. And if it is, we'll take that for you too. Yields 198.12. On 10s. He's allowed to be late. He's the President of the United States. WTI 109.84, Tom. Positive on the day by a little more than 3% on the week, facing its biggest weekly loss of the year so far.
I know gold under 2002, 2020-ish has sort of been stasis, and we've come back nicely, and that's the quality of the tape here. Range bound, maybe at a calmer point than it was 2 days ago. Right now, and this is a joy, George Bohr is usually with us, head of fixed income at Allspring Global Investments, and it's about yield, it's about price, and it's also, George, with your wonderful research note about what adults like you are thinking about, which is mark-to-market. It is mark-to-market March. How are we going to mark-to-market all the distress in the system in the fixed income space?
John, you bring up a great point, Tom. And fixed income's been rattled this year. You know, it's been a seismic shock, a seismic exogenous shock has hit the system, and it's both financial and it's political. The whole morning session's been all about politics, and that's the foundation upon which a capital market sits. But when we look at capital markets right now, you've seen roughly, we estimate there's roughly $1 trillion loss sort of working its way through the system. That's a mark-to-market loss on tradable securities. The number is certainly bigger than that when you think about the other parts of the economy that are connected. But when you have a capital loss working through the system, that starts to constrain credit conditions. And that's a real challenge for bond investors. When credit conditions start to tighten up, risk premiums go up, defaults start to rise. The challenges that fixed income investors are faced with, it's about certainty of payment. And so we have two challenges right now. One is sort of the mark-to-market loss that's working its way through the system. And the second, as we've talked about multiple times on the show, is the Fed. The Fed is in the position to start raising rates next week. So we have two major headwinds that are facing fixed income investors, and neither of those go away. And what's happened over the last 2 weeks is the acute pressure that comes from an exogenous shock has increased.
Okay, George, just because of time, and Lisa wants to jump in here as well, but George, just because of time, I don't want to get you in trouble with Kate McKinley, the general counsel of Allspring Investments, but I've got to ask the question, are we heading in the fixed income market for something like what we saw at the LME and nickel, or what we saw in the Chrysler workout of 2009? Are we at a point where the system's going to go bust because we can't find a bid that different parties are happy with?
No, I don't think so. I mean, global capital markets are $200 trillion in size. This is 1/2 of the market. Liquidity in the bond market's been outside of Russia, to be clear, outside of Russian bonds and Ukrainian bonds, the market's actually been relatively well behaved. If we look in the developed worlds, if you look at the activity in the treasury market, in the corporate bond market, in the agency, in the securitized market, liquidity is okay. It's gotten tighter than it was. It's coming off of extremely liquid positions, but we're clearing risk at what seem to be very reasonable prices. And so and it's been a very meaningful shock. So it's an over-the-counter market that's highly dependent on confidence. Right now, confidence is high. You can also look at the banking system. The banking system is very well capitalized to absorb the notional component of loss that's working its way through the system. So we feel confident that the bond market's very robust right now, but it's the secondary and tertiary effects of absorbing material mark-to-market and what ultimately may be realized losses. As they work through the system, a bond investor has to be very careful.
And when you talk about, well, George, you talk about the mark-to-market losses working its way through the system, and you also mentioned the Fed, and I was looking at Fed funds futures, pricing in still nearly 7 rate hikes by year-end, certainly fully by the beginning of next year. Have corporate bond markets priced that in already?
Well, the front end of the curve clearly has. And I think what's priced in is tighter policy and certainly higher inflation expectations. What's not priced in are the economic consequences of that. There's an expectation of a deceleration of growth, an ongoing sort of profitability trajectory that's still positive. Those types of negative consequences that come from a combination of tighter monetary policy and now a very big exogenous shock, which has created, basically a material mark-to-market loss in the financial system. Those components are working their way through the, sort of the outer edges, if you will, of both the bond and ultimately the equity market. And that's really the challenge that we face as we go forward. You can manage sort of predictable economic risk. It's the exogenous shock that really both changes that risk and in many instances accelerated it. And that all ultimately comes back to inflation. So we need to be very careful. We have basically a 3-pronged strategy. One, be very tight on duration. Yields are likely to move higher. Inflation is not going away anytime soon. The trajectory that is priced into the front end may come down a bit, but the Fed wants to raise rates. The second is be very careful with your credit positioning. Liquidity matters. John, you asked about, sort of how the functioning in the market works. We want to make sure we're in liquid bonds that we know we can move around, we can trade, and we can exit if we need to. And then third, inflation is going to be with us for a while. And there are winners and there are losers in inflation. This isn't a zero-sum game. And so repositioning our portfolios to take advantage of material increases in the trajectory of inflation is really the anchor of our portfolios. Companies can reprice with inflation, and some companies in sectors that benefit from that. We've seen it very clearly in energy, but there are other sectors that you may not think of. Things like restaurants, for instance, can reprice actually at pretty much consistent with inflation. And those types of opportunities look pretty attractive.
Hey, George, I've got to jump in. I've got to jump
go
in
ahead.
because I've got some breaking news. I'm going to leave it there. George Bory there of Allspring Global Investments. Here's the line from Interfax on President Vladimir Putin. Certain positive shifts in talks with Ukraine. Futures up off the back of that, Tom. Session highs, S&P 500 futures now up more than 1%.
You've got to see it in different haven trades as well. I go right to Euro Swissy, and yes, Euro Swissy shows weak Swiss.
We are going to return to that story in just a moment. Interfax reporting the following line from the president of Russia. Certain positive shifts in talks with Ukraine. We need some more detail on that. Next, this is Bloomberg.
First step in building a connectome is to get your hands on some brains and then cut them up. It all sounds very grim, but Harvard turns out to be quite efficient with its brain harvesting. Jeff's lab can do a year's worth of research with a single mouse brain. Small chunks of the brain are fed into the slicer, where a diamond blade carves off a thin sliver of tissue. The tissue floats along some liquid and onto a piece of tape. The brain slices are then put into this very large machine, where they're photographed in the finest of detail. Software helps stitch the pictures back together into a single 3D image, and algorithms are applied to help make sense of what's going on inside of the brain.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
Live from New York City this morning. Good morning. Futures turning higher on the S&P 500. Futures intraday session highs at more than 1%, up 1.5%. Was up about 0.5%. Just on this line from President Vladimir Putin, according to Interfax, the headline reads as follows: certain positive shifts in talks with Ukraine. That's the equity story in the bond market. Yields look like this: 2s, 10s and 30s switch up the board. Yields higher by a couple of basis points, back through 2%. Crude backing away from session highs too. Let's have a look at crude, WTI and Brent. We look a little something like this on Brent, 111.23, back down. Crude, WTI, 107, back down. So still higher on the session, but off session highs, up around about 1.7%. So Tom, we'll go through the headline, then we'll get to the team. This is according to Interfax reporting that President Putin said certain positive shifts in talks with Ukraine. It's important, you need to get both views of the talks. The other side, of course, belongs to Ukraine. Does Ukraine see it quite the same way, Tom? At the moment, we only have one half of the story.
And the question is, what is the dance calendar today? John, let's sharpen that up. In Washington, waiting President Biden's comments, Anne-Marie Horton again, and on short notice at Versailles, Maria Tadeo. Maria, the thing I see in the zeitgeist right now is the gentleman from Finland with a unique stance of the Finns is speaking with Mr. Putin today. Can Finland be the go-between that will allow for this headline from Mr. Putin?
Well, Tom, if you look at the structure that the country has, they're a member of the European Union, but they're not a member of NATO. So that is a neutral status that has been floated at times as a solution for Ukraine. At the start of the war, remember, Ukraine said it would not give up the bid for NATO membership and EU membership. But the language from Zelensky has changed over the past week. Now he says that NATO did not really support Ukraine the way that he expected. So that means that he is not as keen as he was 2 weeks ago. So that is potentially a way out of here. Whether they copy that model as a potential diplomatic way out remains to be seen. But I would also point to the press conference that we had yesterday between Russia and Ukraine. The Ukrainians said the Russians had not moved in their position. What it shows in many ways is that this is a war that's not going well for Russia. It's been 15 days. The economy is under huge pressure. The stock market has not opened in 2 weeks. And this is a country that is completely isolated for the world. Now, you could argue this points to a diplomatic solution, but here when I speak to officials in Europe, but also the Ukrainians, they say they really want to wait and see. They don't want to focus on what Putin says, but what he does. And the first thing he needs to do is a ceasefire. So far, the Russians have not agreed to that.
Well, Maria, frankly, earlier this morning, we were talking about the exact opposite, especially as Lukashenko from Belarus was headed to Russia with this idea that that would potentially drag Belarus into the conflict. You know, are you surprised that there is such a knee-jerk reaction in markets to this optimism when, frankly, strategists seem to downplay the perspective of possible diplomatic relations?
Well, I have to say I'm surprised myself by this headline because the narrative going into today was very different. Remember, there was a bombing very close to a Polish site. Poland is a country that has delivered and continues to deliver weapons for Ukraine. At the same time, Lukashenko, who's flying into Moscow, the idea is that Vladimir Putin wants more soldiers. He needs more boots on the ground. So that would signal that the war is not going well. So again, this is a whiplash from the narrative that we started off the day. It could point to a diplomatic solution, but I would stress the point of the ceasefire. The Ukrainian government and the Ukrainian authorities say there will be no diplomacy as long as Russia continues to bomb our cities. So until we get to a ceasefire, frankly, I would be very skeptical.
You have to remember that everything you see in markets is relative to something. It's relative to where expectations were, relative to what the market has been doing. This market has been beaten up. Sentiment is really low. And for that reason, it doesn't take much to spark a little move higher on the S&P 500. And Marie, to say this is important with conviction, you need to have the other side of the story. This is the interpretation of the president of Russia, who, let's face it, over the last few weeks has been incredibly unreliable about the trajectory of what would happen in Ukraine, the dialogue with Ukraine, and subsequently over the last few weeks, everything he's told us, Anne-Marie, let's be fair, I'll try and be diplomatic, hasn't been true. So until we hear the Ukrainian side of the story, can we really say that we've made an improvement here?
No, and also I'm following the Kremlin pool from afar, so I see what President Putin is doing right now, at least from what I can see, following this Kremlin pool reporting and the video they're putting out. He is sitting down with Belarus President Alexander Lukashenko at this moment, and he does this. He stages these events before he goes behind closed doors to have discussions, and he knows what he's saying to a domestic audience, and that is what he is conveying to a domestic audience, that potentially there is some improvement on peace talks. The market takes this as potentially this is a very big open window to that, but you have to caveat to the theatrics of President Putin and what he is doing. And I would say that at this moment, there is nothing on the ground that suggests that.
And John, what Anne-Marie says there nails this for our global audience. The staging of events. Anne-Marie's personally witnessed that in Moscow. John, to me, that's the key phrase.
Tom, I couldn't agree more. The only thing we can do right now is give you the headline, tell you the price move, and then go through the questions that we still need to be asking. So here's the headline. There are certain positive developments as far as negotiators from our side informed me. The president of Russia telling his Belarusian counterpart moments ago, according to the transcript, Tom. There's the move in the market at 1.4% on the S&P. TK, until we hear the same thing from the Ukrainians, I don't think we can move forward with much confidence.
And I just look technically at S&P futures, and I would say that this leap up is into a technical void. It's not any kind of critical breakout as well. Where are we going from here, John?
Well, let's thank the guys. Maria, thank you very much. And then let's get to the conversation with Bruce Kassman of JP Morgan. Bruce, let's start here, just quickly. Your reaction to this headline and how you'd process a line like that. There are certain positive developments as far as negotiators from our side informed me. The president of Russia, your thoughts?
On the political side, I'm just going to keep an open mind here, recognize the wide range of uncertainty, but also recognize how far the conflict has gone so far in terms of sanctions, in terms of the damage to the Russian economy. And I think the damage that will be inflicted on the global economy, I don't think that will be reversed. I don't think the sanctions will be reversed very quickly, even if there's good news. So from a macroeconomic point of view, which is the world I live in, we are going to feel the effects of this clearly for a while.
Dr. Kassman, you know I would never front-run Michael Feroli, but let's do it. Okay, you've got a research report coming out tonight, Weekly Prospects. How are you going to adjust GDP? I don't want to get out in front of your clients or Feroli, who's working with a slide rule, but how are you going to adjust American and global GDP this weekend?
Well, I'm not allowed to front run my forecasts either, but what we've been doing as a general rule has been increasing the drag as we've continued to see more pressure on energy prices. Obviously, the natural gas is a big factor in Europe. Crude oil is a factor elsewhere. Broadly speaking, what we're doing is raising inflation and lowering growth, and we continue to move down that path. I would emphasize, though, that we still have growth for the U.S. this year running above trend. We still have the unemployment rate falling. These are all works in progress in terms of understanding the impact, but we've dented our views on the U.S. and the global economy. We haven't derailed our view on a still solid recovery.
Lisa, I thought that was very diplomatic. I thought Kassman handled that well.
Well, basically, you can expect a downward revision, perhaps, if you are ratcheting up inflation
writing it in, Bramowitz, come on.
And lowering the growth estimates. And it leads us to the R word, the recession call. And Goldman Sachs put out their note with their downgrade of their expectation. They said the U.S. recession chance over the next 12 months, they see it as about 20 to 35%. Is that consistent with what you're thinking of right now, Bruce?
I think somewhere in a 20 to 30% range makes sense to me. I mean, that's just recognizing how much uncertainty is here. But I would emphasize that the U.S. economy has shown already pretty significant resilience in the face of shocks. The underpinnings are healthy. So I think what these recession probabilities reflect is how uncertain the potential outcomes are here, not the fragility of the U.S. economy right now.
Although, Bruce, at 10 o'clock a.m. Eastern, we're going to get that University of Michigan sentiment survey. We're expecting it to post a new post-2011 low. How significant is that in terms of consumer spending and how long this resilience can last?
As you know, the Michigan survey has already moved down sharply, and I think it's telling us something important, which is consumers are worried and particularly worried about the rise in inflation. What's happening in the conflict is it's pushing higher prices on energy, higher prices on food. U.S. inflation is going to stay elevated. I think the qualitative signal is important. I don't think the level of confidence specifically lines up with spending. The key issue here is we're getting hit by a huge resiliency test in terms of household purchasing power. And we do need households to eat into what is a large reservoir of excess savings to make it through this. We do think that's going to happen, but it's not going to happen without some pain in terms of U.S. consumption and U.S. growth overall.
Bruce, just quickly, how hard is it going to be for the Europeans to avoid recession over the next 12 months?
Much harder than the U.S. And I think the question there really is how strong is their commitment to take the pain of cutting off natural gas supply from Russia, and how willing are they to offset some of that drag with fiscal supports. Right now, we're thinking Europe is going to be flirting with quarters of growth close to zero. And I think we do need to see a significant fiscal response here, cushioning the blow to keep the European recovery going.
Hey, Bruce, awesome. As always, Bruce Kassman at JP Morgan. Here's a headline for you from the Financial Times. BlackRock hit by $17 billion of losses, Tom, on Russian exposure.
This is what we do at Bloomberg Surveillance, folks. You get a grizzled pro like George Borey of All Spring Up, and I thought he nailed it, absolutely nailed it, John. And boom, there's Brooke Masters doing the math for the FT. Brooke focuses on the fact that this is huge scale and that BlackRock has 10 trillion in assets, but still, John, that's a big number compared to what we saw at PIMCO.
Potentially the numbers at PIMCO. Lisa, the numbers are building and building quickly.
And the fact that we haven't seen the realized losses means that some of the contagion nodes are what people are watching, the trickle-out effects, the financial instability that people are worried about, and that we saw at the London Metals Exchange in a very acute corner. How much further do we have to go as this percolates through the system, John?
Well, don't get TK started on nickel. Let's save that for another day, Lisa. The headline from Vladimir Putin in the last couple of minutes. The quote as follows: "There are certain positive developments as far as negotiators from our side informed me." That was Vladimir Putin speaking to his Belarusian counterpart, Alexander Lukashenko. The market action and reaction pretty obvious right now. Up 1.5% on the S&P, up 64 points. Yields on a 10-year back through 2%. A 10-year right now at 2.0057%, up a couple of basis points, Tom. Headline risk goes both ways, and we've seen that play out in the last 10 minutes.
I would go to Maria Tadeo's voice and the tone of voice that she described of what we've seen in Ukraine in the last 48 hours. And John, there's such a separation here, as Anne-Marie Horton said, a staged moment by the gentleman from Russia. And you compare that to what we're all seeing on the ground, including 94 miles from Leuven, those airfields.
Sure.
I mean, there's the market reaction. It's what it is. We have to
Precisely.
report it.
I would detach myself from the price action. Markets and market participants have to judge an ever-evolving, shifting in the probability of a certain range of events. I can give you the news. That's the line from the president of Russia, according to a transcript, according to Interfax 15 minutes ago. Tom, for me, as a journalist, I need the other half of the story. I need to hear from the Ukrainians this morning.
I wonder if Russ Kostorich is distracting himself from the price action this morning over at BlackRock.
That line from the FTA, we'll pick up on that in just a moment. The losses at BlackRock. Futures up 1.5% on the S&P, on the NASDAQ, up almost 2 percentage points. Crude backing away south of 110, 107.86.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
GDP growth has been revised downwards for the near term, owing to the war in Ukraine. The Governing Council sees it as increasingly likely that inflation will stabilize at its 2% target over the medium term. The war in Ukraine is a substantial upside risk, especially to energy prices.
Christine Lagarde, the president of the ECB, the outlook clear. The forecast for growth cut, the forecast for inflation, they're taken higher. Will the Fed follow suit next week? Futures positive 1.4% on the S&P, elevated up 60 points on the Nasdaq, up 1.7%. A lift in this equity market off the back of this. From a transcript with a conversation of Vladimir Putin telling his Belarusian counterpart Alexander Lukashenko the following. The quote, Tom, there are certain positive developments as far as negotiators from our side informed me. Putin saying talks are happening almost daily.
John, I noticed the VIX under 30. I guess that's important, 29.08. What's your other observation here, John?
Look, a breakout, Tom, tells you more about how the market was positioned going into the headline. I think for the conversation more broadly around Russia and Ukraine, we've got 50% of the story. Give me the other 50.
You know, there's the 50 and the 50, and then there's the Biden story, and we'll do that in the 10 o'clock hour. Right now, on the attitude of America towards war and towards the moment of this fractious 2022, Mohammed Yunus joins us, editor-in-chief at Gallup. Gallup is a polling organization. They've never done work for this party or that party. They were seminal in the 30s of saying, no, FDR will win versus Alf Landon, and they moved on there to measuring America's tone. I want to know, Mohammed, on the death of the American liberal order. We've got a reaffirmation of war in Europe, not the Liberal Party or the left of the Democrats, but the sense of a liberal order coming out of World War II, the end of the Cold War. How have you polled that in recent days?
I'll tell you, Tom, there couldn't have been a better time to come out of the field with our last survey. We do something called the World Affairs Survey, where we ask Americans basically, what role should America play in the world and what threats does it face? We came out of the field literally on the eve of the invasion of Ukraine. And before any troops or tanks actually crossed the border, Americans were pretty focused on this issue more than we usually see. And I can point to many metrics. First of all, just the favorability of Russia has hit an all-time negative high of 85%. So when you think about China as a focus in the United States, it's only 79% favorability. Russia has now outdone that. For context, in 2003, Russia had a 63% favorable rating with the American public. When we ask Americans about who's the greatest enemy facing the United States, not surprising, China comes on top at 49. Right. Russia actually came out right under them at 32. We ask about a series of critical threats to the vital interests of the United States. We saw an uptick in Americans' concern with the military power of Russia increasing. 59% of Americans describe that.
Because of time, I want to be sure, because Lisa and John want to get in here. How isolationist are we right now?
We're not that isolationist. I would argue that when you look at the recent polls of the last week, the public is actually far ahead of leadership, both here and in Europe. Every decision the Biden administration has made has been supported by public opinion prior to it being taken. So the notion that Americans are isolationist or checking out is not in any way supported by data. And we see a huge difference between now and 2015, when there was a war in Ukraine between Russia and Ukraine, and Americans were not nearly as dialed in or focused on.
But Mohammed, how much are they concerned also about the inflationary backdrop, and does that contribute to a concern about their own well-being versus this feeling of injustice that's going on with Ukraine?
Lisa, you nailed it. Before the invasion, 79% of Americans said that inflation is likely to go up a lot in the next 6 months. That was a record high that we haven't seen in decades here. So you can only imagine now that oil prices have exploded, that concern is only going to skyrocket. I do, though, caution against thinking that because of that financial impact, Americans are going to kind of shy away, because the decisions the Biden administration have taken, like no longer importing Russian gas and a lot of talk about oil prices and gas prices, don't seem to have scared Americans away from the focus on the importance of this conflict for U.S. vital interests.
Mohammed, what are you looking for to determine a shift in that? Because we were just talking with Bruce Kasman of J.P. Morgan about the resiliency of the American consumer, about despite some of the concern of inflation, the concern of yet another crisis in a crisis-riddled era, that people are going out and spending. People are still living. What are you looking at for the sentiment to shift, to indicate perhaps a deterioration in that?
Well, our economic confidence index measure, which basically asks Americans, how is the economy doing for you right now and in the future, in the foreseeable future, remains in the negative. It's been improving, but inflation has really been dragging down Americans' perceptions of the economy. So we're starting at a net negative. If I would look to something, obviously we're going to look to see how much that now dips, now that prices have gone through the roof, not only on gas, but on goods as well. So that is the critical question, but we shouldn't assume that because inflation is hitting Americans hard, that they somehow are willing to compromise or switch it out for no longer being involved in supporting Ukraine.
Mohammed, this new line that the administration is using around the inflation story, the Putin gas hike, is that resonating? Do they still believe that it's Biden's fault? Is it shifting at all? What is your read on that?
One thing that we've known, Jonathan, from this, at least at this point of the Biden administration, is they have failed at their number one objective, which is to minimize the partisanship in American public opinion. My answer to your question is essentially people that support President Biden will buy that line. But all of the people that don't support President Biden were complaining about gas prices long before this situation erupted. So I think, unfortunately, party ID is still going to drive primarily how people react to President Biden's presentation of the facts.
Great to catch up, Mohammed. As always, Mohammed Yunus at Gallup. Just a look at the price action again this morning, up 1.1%. We fade a bit off the pop of around about 30 minutes ago on the S&P 500. NASDAQ futures up 1.4%. This line from the president of Russia, Vladimir Putin, there are certain positive developments as far as the negotiators from our side informed me. Those positive developments hard to identify, Lisa, with the exception of maybe the line around neutrality and the word we got from the Foreign Minister Sergei Lavrov just yesterday.
But that was cast in a less positive bent than what we're hearing from Vladimir Putin. The fact that Vladimir Putin is coming out and publicly talking about positive shifts makes you wonder why. Is it because he's buying time? Is it because he wants an end to this and sees that he is losing traction? What are the actual motivations behind his signaling at a time when we get a lot of different opinions on this?
And the signal and the dialogue, the rhetoric, Tom, is one thing. What you see on the ground, the reality of what's happening in Ukraine overnight again, is quite another.
I don't think our audience on radio and TV needs us to recapitulate that. Everybody's riveted to it. John, I do suggest that the European newspapers have been much, much better of the horror of what we're seeing, the scope and scale of it, the imagery of it. It has just been absolutely shocking. I see what Bloomberg says about Middle East fighters coming to the rescue of Mr. Putin. That's a story that needs to be developed.
Futures up 55, call it 56 on the S&P, up around 1.3%. Yields higher by a couple of basis points, just back through 2% on 10s. Crude up 1.9%, 108 on WTI, and euro dollar showing just a bit of strength. Euro dollar back through 110. From New York on TV and radio, this is Bloomberg.
Nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las modificaciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
This crisis has certainly put a few legs of support under the inflation risk scenario.
It isn't just oil that's rising, it's natural gas, it's food, it's metal.
The ability for central banks to control inflation in this environment is certainly at question.
Knowing where that line is between doing enough to slow the economy and doing so much that you overdo it is very, very murky right now. We can endlessly debate what the terminal rate is going to be, but it's got to be higher than where we are.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Equities with a bounce from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. Futures up 1.35% on the S&P. On one line, Tom Keene, from the president of Russia.
Well, one line from the president of Russia, and we're going to have good conversation on this through this hour. Please stay with us on that very informed conversation. John, as you mentioned, there's an equity lift as well. I see it across the safe havens. I see it in some of the commodities as well. I would respectfully suggest none of it matters, John. What matters is the full-scale war, and we need to see how that adapts to the president's speech this morning.
And Tom, the difference between what we hear from the Russian president and what we see, the reality of it on the ground in Ukraine. Here's the line from the Russian president. There are certain positive developments as far as negotiators from our side informed me. Vladimir Putin, Tom, earlier this morning.
Our team summarized moments ago, our reporters across all of the continent of Europe. And John, the single thing that I think gives pause on a Friday morning when we're all worn out is the bombing of airfields 94 miles from Lviv in western Ukraine, close to the Polish border.
Lisa, this is just 50% of the story. We need the other half.
We need the other half from the Ukrainians, and we've heard from them. It's a lot less optimistic, at least we were hearing yesterday and the day before. A lot of international strategists have also come on this show and said that they don't see as clear of an off-ramp, especially as Russia does try to get additional troops and supplies to the troops that are out there in order to escalate further. So given that, right now, we have to treat any news that we get with a bit of skepticism.
Yesterday, the Russian foreign minister said Russia wants serious talks with Ukraine and Belarus. The Ukrainian foreign minister said this: Russia seeks surrender, Ukraine won't surrender. What's happened in between? A change of interpretation? A shift in substance?
Honestly, what's the off-ramp, right? I mean, is it the idea of assuming a posture of neutrality, as our story suggests, that message from Ukraine has helped Vladimir Putin get to a more conciliatory place, or is there something else in the works? But honestly, if we're talking about this without a ceasefire and without any prospect of a ceasefire, can we get anywhere?
Has anything changed? We'll get into that in just a moment. Futures kick higher at 1.3% on the S&P, on the NASDAQ up 1.5%. In the bond market, back through 2% on a 10-year yield. Crude off session highs, 107.62. We pulled back to positive 1.5%. And euro, Lisa, euro dollar showing a bit of strength here on the euro side, 110.11, up 0.25%.
Reassessing what we heard from ECB President Madame Lagarde yesterday, coming out and talking about possibly accelerating the taper of the pandemic-era purchase program. We're all hoping for a diplomatic resolution. Let's be clear. The reason why we're being pessimistic or skeptical is not because we don't want it. Everybody wants this, and European leaders are finishing up a two-day meeting in Versailles today. They are trying to figure out a way out of this without torpedoing the European economy and while preserving some of the Ukrainian land as we deal with all of these images of destruction. How much do they talk about accelerating their defense spending, and how do they plan for an era with less Russia dependence? At 10 a.m. in the United States, we get the University of Michigan Sentiment Survey for the month of March. We get a read on how much consumer sentiment took a hit in the wake of this conflict, as well as what it did to the price of oil. It already is at the lowest level since 2011. How much further will deteriorate from here? And at 10:15 a.m., President Biden is discussing further potential actions by the U.S. To hold Russia accountable for what it's doing in Ukraine. Really, how much does he use this as a time to message the need for Americans to absorb the higher costs of actually tightening the screws on Russia? We're already seeing the inflation expectations for the next 5 years rise to the highest levels going back decades to 3.5%. If you take a look at break-even rates, how much can we attribute this to higher gas prices? How much are we looking at a very different regime, especially as even the likes of Treasury Secretary Janet Yellen, John, have come out and said, honestly, we're going to have to expect a very uncomfortable rate of inflation over the next 12 months, a different tone, really, than what we've heard from her in the past.
Lisa, thank you. Team coverage begins right now with Bloomberg's Anne-Marie Jourdain at the White House, Maria Tadeo in Versailles. Let's go through this calmly and carefully. Maria, the line. There are certain positive developments as far as negotiators from our side informed me the words of the Russian president moments ago. Your interpretation of that from Vladimir Putin?
Well, Jonathan, this is a complete whiplash from everything that we've heard from the Russians until now. Yesterday morning, the foreign minister, Sergei Lavrov, was still denying a war in Russia. The Ukrainians said they had no interest in talking about a ceasefire, and this idea of the ceasefire is so crucial because Ukraine has said they're not going to debate or talk or give anything until there's a ceasefire on Ukrainian cities that continue to be bombed. This is happening after a maternal hospital with pregnant women was bombed. This is also happening at a time in which President Zelensky, in a video that he put out 6 hours ago, was saying, I worry that Russia is going to do a false flag attack on Mariupol. Remember, that is where the battle really is right now, and use biological weapons. So all of this is a big contradiction of everything that we've heard and done from Russia up until now. I'm always told, do not listen to what Vladimir Putin says. You have to look at his actions. The other thing, if I could, just very quickly, this is happening in a press conference with Lukashenko. At one point, Lukashenko tells Putin, you do not have to justify yourself for anything, and Vladimir Putin agrees. It's also happening at a time where the Russians are welcoming, well, essentially fighters from Syria to go fight in Ukraine because the war is not going well for him. The economy is wrecked, and he promised Russians a quick victory. That's not the case. It's day 15th.
Anne-Marie Jourdain, let me go to you on this. On Mitt Romney, the gentleman from Utah and Massachusetts, and 40 Republican senators, and their basic theme is let's go. I could go to Marie on this question, but you look lonely, Anne-Marie. I'm going to go to you. What do we need to do to appease 40 senators who say let go? Let's go.
Well, overnight, we did have the Senate as well get through the funding for the government. That came with more than $13 billion in aid for Ukraine. I believe what Senator Romney was speaking about in that moment, you're talking about, Tom, is about those fighter jets.
Exactly.
Right?
What are we going to do to let's go this morning when the president speaks?
At the moment, I don't see the United States moving a position on fighter jets, and a lot of that comes down to the fact that the Pentagon believes that Russia would interpret that as the United States entering this war. That would mean United States military firing against Russian military. And that is why at this moment you do not have those fighter jets moving from really any NATO country, because really it's about who touches them last that goes into Ukraine, that they're worried about, that the Russians will take that as an escalation and a provocation.
Maria, what's coming of the Versailles talks? What is your sense of the big conclusion at the end of the meetings today?
Well, what we know is that we're not going to get a full ban on energy. That's not going to happen. It's been made very clear that some countries in Europe believe they have sanctions fatigue. They want to see the full impact of this, and they really believe this is going to hurt the Russian economy. In fact, a lot of officials here behind the scenes will tell you the change in tone from Vladimir Putin does not respond to diplomacy. The issue here is that this man in 2 weeks has wrecked the Russian economy, and the pain is yet to come. The other important thing, and I'm waiting for Emmanuel Macron to come out ahead with the head of the European Commission, is whether or not they still believe there could be a diplomatic solution to this. There has been a number of officials that say Russia does not attend to diplomacy. It's just the language of force. They will only go back to the negotiating table if they believe they're going to lose the war, and Putin needs to save face. Whether this is the point that we're seeing now, and this is why we're seeing this whiplash in his language, remains to be seen. But again, we really need to stress this is a war that's not going well for Russia. He promised a quick victory. He said Ukrainians would be happy to be liberated by Russia, and it's been the complete opposite.
Anne-Marie, just to wrap things up, let's push forward to 10:15 Eastern Time. What do you expect to hear from the President of the United States?
Well, our Jenny Leonard broke this scoop last night, really outlining what the president is going to say, and that is going to be ripping Russia basically as a neutral trading partner, so getting rid of those WTO rules that most countries abide by. Now, for the United States, it's not as important because this would clear the way for higher tariffs because the U.S. just doesn't import that much for Russia, but they are talking to G7 and the European Union to work together to do this. This is just another escalation. I think it just proves the point that the United States is not going to stop when it comes on sanctions on Russia. And already this morning, another oligarch, a main one, Vladimir Potanin, has come out and criticized the Kremlin for the tit-for-tat response in these sanctions, saying they should be more pragmatic.
There we go. Are we starting to see some cracks emerge? Anne-Marie, thank you, domestically at least. Anne-Marie Hordern, Maria Tadeo, thank you very much as well. The losses piling up on Wall Street, and we're slowly, and I mean slowly, getting the picture of it because it's taken some time. It will take more time. This from the Financial Times this morning, Tom, the lead paragraph. BlackRock, the world's largest asset manager, has taken about $17 billion in losses on its Russian securities holdings because of the attack on Ukraine.
For Global Wall Street right now, the news flow is absolutely extraordinary. John, let me fold in two things real quickly here. Joel Levington, moments ago for Bloomberg Intelligence, has published a summation of what this debt crisis will be. We need to go through that, but it has his full attention. David Wu, legendary at Bank of America, now with his own shop, goes to the mathematics, John, of something I'm not a fan of, and that's value at risk, or VAR. And David Wu looks for a global VAR shock. What this is, John, is fancy mathematics involving kurtosis and Telebian tails and the rest of it. And David Wu says this is baloney, this is exogenous and huge, and VAR can't handle it, the risk measurement of the big banks.
Lisa, it takes time for things like this to unravel and for the losses to appear. The reporting from the FT this week on both BlackRock and PIMCO, for that matter, this week alone.
Especially if the Determination Committee for Derivatives counts Russia as in default, then you see a lot of covenants triggered, and then you start to see the actual losses get realized, how the financial system handles it at a time when central banks are not going to swoop in necessarily as the Fed or ECB put.
Futures up 1.4% on the S&P this morning. Good morning to you all from New York. Heard on radio, seen on TV. This is Bloomberg.
Keeping you up to date with news from around the world. With the first word, I'm Ritika Gupta. President Biden is set to call for an end to Russia's preferred trade status today. The move would clear the way for increased tariffs on Russian imports. The president can't unilaterally change Russia's trade status because that authority lies with Congress. Both Democratic and Republican lawmakers have called for suspending normal trade relations. The U.S. Senate has passed a spending bill that includes $13.6 billion in security and humanitarian aid for Ukraine. That was part of the $1.5 trillion measure that will keep the federal government in operation for the rest of the fiscal year. Federal agencies will see a 6.7% increase. The bill now goes to President Biden for his signature. Economists surveyed by Bloomberg expect Fed policymakers to be cautious when it comes to raising interest rates. According to the survey, the central bank will raise rates next week for the first time since 2018. Economists also say the Fed will signal a faster pace of hikes this year, though they may be cautious because of the war in Ukraine. BlackRock reportedly has taken a $17 billion hit in losses on its Russian securities holdings. According to the Financial Times, the vast majority of those Russian assets can't be sold in the wake of the Russian invasion of Ukraine. BlackRock is the world's largest asset manager and has more than $10 trillion in assets under management. Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front row, the best seats in the house for business's greatest minds.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Big things are happening on Bloomberg in March. First, Bloomberg Triple Take, breaking down the day's biggest stories.
Today's Triple Take focused on the energy transition.
Then, the return of Bloomberg ETF IQ.
The last major holdouts of the ETF revolution.
And the debut of Bloomberg Crypto.
The CEO of Binance weighed in.
Finally, David Rubenstein brings you insights and advice from the world's greatest investors on a new season of Bloomberg Wealth. All this March, right here on Bloomberg.
We're constantly engaged in a discussion with President Putin. Till the very last minute before he launched this war, and after he decided to launch this war, to try to reopen negotiations and get a ceasefire. The conditions he put on the table are not acceptable by anybody.
Emmanuel Macron, the president of France, just yesterday, alongside Chancellor Scholz of Germany, pleading with their Russian counterpart, demanding a ceasefire. They did not get it. That line from Macron, the conditions he put on the table are not acceptable by anybody. Futures right now at 1.4% on the S&P, on the NASDAQ, up 1.6. Yields back through 2%, 2.018% higher by 3 basis points now. 50 minutes ago, almost an hour ago, Tom, this line dropped from Vladimir Putin. The quote, "There are certain positive developments as far as negotiators from our side informed me." Vladimir Putin, alongside his Belarusian counterpart.
Watching these headlines carefully, and we'll continue to monitor up to the president's speech here in 3 hours. Christopher Harvey joins now, head of equity strategy at Wells Fargo. Chris, I want to go to the wonderful David Wu, now retired with his own shop. And David Wu says, watch out for the global VAR risk. Explain to our audience the risk models that banks have and what they could do to their equity portfolio, given the exogenous shock of this war and global slowdown.
All right, so let me try and explain in very simple terms. You have certain normal distributions, or what you would say normal type returns. In types of shocks or in very unexpected periods, those returns go outside of those norms. They go outside of what's expected, and that causes all sorts of havoc. The other thing that happens is correlations typically go to 1. Now, I'm exaggerating, but correlations start to compress. And so diversification is no longer your friend. Okay. And so basically what happens is it's very hard to find protection. And that's one of the things we've been talking about in the equity markets and the capital markets Nowadays, it's very difficult to find risk aversion assets and protect the portfolio from big shocks.
Okay, so here's the accounting maxim, Chris Harvey, and you know this tattooed to your brain. Can balance sheet write-downs of debt and, frankly, of equity, can that go over and destabilize the system enough where VAR doesn't work?
Tom, I think the U.S. banking system is exceptionally well capitalized. I think they're exceptionally well positioned for this situation, and I don't see anything dramatic or systematic to really hurt the U.S. banks at this point in time. I can't speak so much for the European banks, but I'm very confident about the balance sheets at the U.S. banks.
Chris, how would you know? How do you know when we're in a bear market? What do you look for?
So the things that we look for is we'll look to the credit markets. Before we see a bear market, one of the things we begin to see is pushback in investors, pushback on credit. So when you're bringing a new issue to the market, what you'll see is more pricing concessions. You'll see the way it's placed. You'll see how it trades. And those are all indicators that the risk appetite isn't quite where you want it to be. And then the bigger picture is you're always looking at the systematic risk. How much systematic risk is in the system? And that's more of an art than a science. When we look at balance sheets, whether it's corporate balance sheets or consumer balance sheets, they're in very good shape. And that's typically not what you see right before a big bear market or before a recession. But John, to answer the question, the first place we look for is into the credit markets and the new issue market and how that trades and what types of concessions are required to fund yourself.
Right now, how much have we already shifted to pricing in a growth scare versus simply something of an exogenous shock boosting inflation?
Lisa, that's a great question. I'm not sure I have a great answer. We thought we'd have a 10% pullback. We've had a 10% pullback. How much of that is growth? How much is that geopolitical? It's hard to say. And the reason why it's hard to say is we don't know the tail end of the geopolitical. We don't know how this is going to come out. It's great that Putin says some positive things, but we're still at war, or we're not still at war, but there's still a war going on, right? And this war could go on for days, for weeks, for months. And if that's true, that's a very different path than if we get to a resolution in days and weeks. And so it's hard to tell. But obviously, what I will say is, if you look at when the war started, the equity markets were down about 5% in the 3 weeks before that. Since the war started, the equity market's down about somewhere between 1% and 2%. Yeah. So there was a lot of anticipation. Now, if things go worse, I think there's a lot more to go.
So, Chris, given that uncertainty, how wide is the band of possible forecasts for year-end for the S&P for you?
Again, we're still sticking to 47.15. We were one of the lows on the street coming into this year. We haven't changed that number. We are looking at earnings. We are looking at margins. We're beginning to worry a lot more about margins than we did before. But right now, we're pretty comfortable with 47.15. If this does spiral into something much bigger, if it does drag out much longer, we'll have to, as with all things, we'll monitor it and we'll check it and we'll reevaluate. But right now, we're very comfortable with 47.15.
Chris, did you ever think 3 months into the year that 47.15 would start sounding bullish?
No, I didn't.
Amazing,
and
isn't
the funny thing is, at the beginning of the year, people were telling me, hey, Chris, why aren't you pushing up your price target?
Yeah.
And if you recall, we were the bull on the street at the end of last year. We thought that there was going to be a melt up. We got pretty close, but not quite there. But I did not think that we would be turning bullish this early in the year.
It's moved quickly. Chris, we appreciate your time. Chris Harvey of Wells Fargo. Tom, Chris is not alone, that's for sure. Just getting a headline from the Ukrainian leader, urging the start of spring sowing despite the war. Now, Lisa, we talked about this.
Yeah.
This is about farming, and this is really, really important.
It is important, and it almost is moving because it really recognizes how important Ukraine is to the world food market, providing Ukraine and Russia provide 86% of the wheat imports to Egypt. Just to give you a sense of the importance here, if they don't get out there, this could lead to hunger crises across Europe and frankly across the world. And the fact that he's saying, look, you need to get out there and plow the fields because that's important for this world is really telling.
Waiting for the headline, Tom, a response to what we've heard from the Russians this morning. coming. I don't see one just yet.
Well, the Twitter sphere is out there in foreign languages I don't understand. And even if it was in English, John, I'd be hesitant to talk, the noise out on social media. What I can say is there seems to be some discussion going on with Mr. Zelensky right now, and we'll bring that to our audiences when we can. John, I need to emphasize this.
Sure.
People like Chris Harvey, it is tough to do their job right now.
Big time. Futures up 1.3% on the S&P, on the Nasdaq 100, elevated up 1.6%. Yields back through 2%, 2.0163 on a 10-year, up 3 basis points. Crude backing away, still positive, but well off session highs, up 0.9% on WTI at 107. From New York City, this is Bloomberg.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
One line from the president of Russia 60 minutes ago. There have been certain positive developments from negotiations. Have there been? We need to hear from the Ukrainians to confirm that from their side to get a more complete story. Futures, though, they bounce at 1.3 on the S&P, on the Nasdaq, up by 1.6%. That's the equity story. The bond market story looks like this: 2s, 10s, and 30s. A 10-year yield back through 2%. Yields up to 2.0163. Yields higher by 3 basis points. The call from Goldman overnight: tighter financial conditions, 1, lower consumer sentiment, 2, and then slower European growth, 3. Put it all together, you get a downgrade for US growth, Tom, down from 2% Q4 over Q4. They now look for 175.
Yeah, I think the critics have been too harsh. I mean, everybody's down there, but with this huge exogenous shock, John, I would look for massive adjustments in the next 72 hours on growth, getting ready for that Fed meeting next week.
Exactly, Tom. Precisely where I wanted to go. Lisa, yesterday at the ECB, a cut to the growth outlook, and then an upgrade, if you can call it that, to the inflation outlook. Does the Fed repeat the act next Wednesday?
And how does a central bank respond to stagflation? Because that is ultimately the type of trend that you're talking about. This is the central banking nightmare because there is no good answer in terms of rate hikes.
And how much demand destruction does this cause? Switch on the board. Crude, WTI and Brent, off session highs. Brent through 110, WTI at 107. And would you believe it, that we've got a weekly loss on our hands here, the biggest weekly loss potentially of the year so far, given everything that's going on. The range on this one, and shout out to Brad Sullivan for this one, Tom, because this is not my line, this is his. A $30, $40 range on crude, which is basically how much crude cost 2 years ago. That's been unreal, Tom.
Well, this is a good point, and we don't need to do it here with the time constraint we have, but the ranges have widened out, and that's normal, John, given crisis.
I would go with that too, Tom. That's your cross-asset price action. Let's get you some single names to mover. We can say good morning to Romain. Good morning, Romain.
Hey, good morning, John. Keep an eye on Oracle. Those earnings came out yesterday. Interesting story here with some of its main revenue missing targets, some of its main earnings missing targets. However, Safra Katz did give an estimate here for that cloud business, saying that growth here, at least for the full year, is going to be in the 20% range. That's kind of giving some investors a little bit more confidence in here. The shares are still down 2%, but well off the lows of what we saw late in the post-market yesterday and in the pre-market today. Meanwhile, DocuSign, which of course was a big pandemic winner, more than tripling in 2020, down 70% now off of that all-time high set back in September, and looks like it's going to lose another 17% from where it closed yesterday here. The earnings were actually good. The problem was the forecast they gave was for a revenue growth target that's going to be much slower than what we had seen during the pandemic. And WeWork, which of course finally came back to the public market in October, providing its earnings just here this morning here. The numbers themselves don't matter as much as the forecast. The forecast right now for about $3.5 billion in consolidated revenue for the full year. We move it forward here, and let's take a look at what else we have. Rivian Automotive also came out with earnings last night as well. The company only produced 2,500 cars since it started production back in September, and said it's only going to produce 25,000 for the full year. That's well below what the street was looking for. The street was looking for about 40 to 50,000 cars. Keep an eye on McDonald's on a 6-day losing streak as of yesterday. Going to snap that today. Shares higher by about 0.9% here in the pre-market. And Major League Baseball and that tentative contract agreement giving a little bit of a boost here, Tom, to some of the TV networks, including Disney. Disney shares up 1% here.
Romain, thank you so much to close this afternoon. I'd also note the 10-year real yield as we go to John Farrow's program this afternoon, moving from that grim negative 1.00 up to a better statistic, negative 0.87. We are looking at Ukraine, the war. Some of the news is just flat out grim, and it folds over to the repricing in the Bloomberg world. The repricing is most critical on the buy side, where the assets are held, and that includes Columbia Threadneedle. Ed Al-Husseini joins us now, their senior interest rate strategist. Ed, we're not talking price and yield today. We're talking markdowns, the FT with the article on BlackRock with a huge number given their scale. Do you presume that we will see markdowns on fixed income in the coming days?
Yeah, I think investors broadly are crystallizing their losses on Russia holdings. And I think the good news so far is that we've not seen spillover effects, particularly demand for liquidity, demand for cash more broadly. So we're seeing margin calls in the grand scheme of things, but they're not really triggering a massive run in the asset management system overall.
Explain the pressure, and I look at FRA OIS, which is one of the thermometers here, the short-term system, and it's elevated but range-bound, and it's not broken out to a worse statistic. Explain the pressure on the buy side to reprice, troubled debt. Does that come from guys like you? Do you call up the managers and say, look, you got to reprice this? How does that happen?
So the FRAO I asked in terms of dollar demand.
Well, I mean bonds. I mean bills,
bonds.
notes, and bonds that are going to be marked down. Where does the pressure come from to mark them down?
Ultimately, the asset owners, right? I think this, by and large, if you look at Russian assets, there's a collective decision here in terms of asset owners saying we do not want exposure to this risk, regardless of how it unfolds in the short term. So there's a broad movement out of Russian debt and equities. In the investment world, there's a broad movement of companies out of Russia as well. So we're seeing exposure to physical assets in Russia getting written down. And altogether, that means we're taking the slice of Russia that's in the financial system out of the equation.
Edward, there is an issue right now with respect to an exogenous shock. At what point, Ed, do we shift into something that looks like a growth scare? And I wonder at what point the recession talks that we have been hearing sort of percolating up through yield curve discussions start to become that much louder.
Yeah, I think we're kind of there right now. To your conversation, the consensus view on U.S. growth is starting to weaken. If you look at the Fed's expectations, the Fed has a print of about 4 for 2022 growth. That's likely to get marked down a little bit next week. But by and large, I think the good news is we're starting from a position of relative strength in terms of corporate balance sheets, household balance sheets, the labor market coming into this year. So we have some buffers to eat through before the risk of a recession becomes real. But I think that turning point usually happens when things are good. So unemployment, sub 4%, the yield curve almost inverted. This is when you start talking about things starting to get worse.
Ed, right now I'm looking at the interest rate expectations for the rest of the year, and we're still pricing in 6 or even 7 rate hikes by year end, at least when it comes to Fed funds futures. Do you think that the rest of the complex of bonds and frankly everything else has factored in 7 rate hikes?
I think we've done a pretty good job. Yeah, and I think especially if you look at the credit space, the move wider in credit spreads, investment grade, high yield, we're about at 15-month wides now. Most of that move has not been because the underlying fundamental story has deteriorated. It's been because of interest rate volatility. So I think we've done a decent job of pricing that in at this stage.
So do you think right now the yields in the long end are basically going to stay where they are around 2%? Or do you think that as we contemplate this, I don't want to call it stagflationary, but this sort of unfortunately high inflation rate impacting growth for a longer period of time, that we could go significantly higher?
The biggest question in debt markets is, will the Fed have to raise Fed funds above 2%? And if we have to price that, how quickly do we need to price that in? At the moment, we're priced for the Fed to get to 2% by the end of next year and kind of stay there. That's a relatively low level. It's not a level that's really squeezing the economy from a growth and an inflation perspective. If we have to go there, that's a rapid repricing. I think that creates some downside for risk, and that very likely inverts the curve very quickly, potentially as early as the second half of this year.
Ed, we've got to run. We've got to leave it there. Thank you, buddy. As always, Ed Al-Husseini there of Columbia Threadneedle. This line from Citi, this just dropped from Andrew Hollenhorst and the team. Consumer sentiment will likely continue to fall as higher prices become more of a drag on real income and spending. 2-year yields have risen 40 basis points from their dip on March, back through 170 over the last 24 hours or so. As the market rapidly prices back in rate hikes, they conclude right here, Tom, with this line: we expect 200 basis points of hikes in 2022.
They got to be backloaded. I mean, do we agree, John, that we're going to see something here in 5 days?
Well, to get to 200, you've got to believe 50 is part of the story for 1 month at least. I believe they've changed their story. It's not 50 basis points next week. It's in the next meeting in May that they're looking for that move.
And I've said that this is frankly before a war in Ukraine, but May 4 to me is very attractive. I mean, it's a meeting that will be absolutely fascinating, and now ever more fascinating.
To Ed's point, Lisa, in response to your question, if you push through 200 basis points of hikes with 2s, 10s, around about 25, 30 basis points through much of this week, what do we end up with?
An inverted yield curve, as he said, which he could see is coming as soon as the second half of this year. We always know that it can be 12 to 18 months after the inversion before a recession takes hold, but that really will have a dampening effect. You do wonder what the balance sheet sort of response will be here to try to calibrate that yield curve response.
If you are just tuning in this morning, equities are higher by 1.4% on the S&P, on the Nasdaq up by 1.7%. Yields are back through 2%, up 2 basis points on the day, and crude is backing away from session highs. WTI just about holding on to 107. All of this from a headline from Vladimir Putin, the Russian president, 1 hour and around about 20 minutes ago, Tom. There are certain positive developments as far as negotiators from our side informed me, Vladimir Putin, to his Belarusian counterpart, Alexander Lukashenko, according to the transcript at about an hour ago, Tom, and we still wait for that Ukrainian response, direct response to what we've heard from the Russian president this morning.
I really want to emphasize to people that the news flow this morning is extraordinary on the war front. We're not following it tick by tick. But, John, James Crispo over the Telegraph literally calling out for a massive attack on Kiev this weekend.
We keep going back to it, Tom, and it's worth repeating. There's so much value in repeating this. What you hear and what you see,
exactly,
they are two very different stories at the moment, Tom.
They are. We're just going to follow them and aggregate it for you with our team at Bloomberg News.
Futures this morning up at 1.3 on the S&P. From New York, heard on radio, seen on TV. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. The United Nations says that 2.5 million people have now fled Ukraine since the start of the invasion a little more than 2 weeks ago. Millions more are said to be displaced within Ukraine. The majority of those fleeing the country are entering Poland. And the richest man in Russia is dissenting on Vladimir Putin's tit-for-tat over sanctions. Billionaire Vladimir Putin warns that Moscow's retaliatory measures risk backfiring. He also cautioned against burning bridges with foreign companies that are exiting Russia under the pressure. In China, Xi Jinping reportedly wants to ensure that he can retain control over efforts to reform the economy. According to the Wall Street Journal, Xi may put a loyalist he has known for decades in charge of the country's economic and financial systems. Hu Lifeng is said to be the leading candidate to be promoted to vice premier. And shares of London-based education and publishing company Pearson soared the most in 22 years today. Apollo Global Management says it's evaluating a possible cash offer for the company. Pearson has a market cap of $7.7 billion. It's been undergoing a long and rocky turnaround effort. And Major League Baseball and its players' union have said, play ball. The two sides reached a tentative labor agreement that ends a 3-month lockout that paves the way for the season to start next month. The deal averts a potential disaster for a sport that was already coping with a loss of TV viewers. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Rethink energy. We have to get rid of the dependency of Russian fossil fuels, and for that we need massive investment in renewables. This is also a strategic investment in our security and our independence.
Ursula von der Leyen, the President of the European Commission, from New York City this morning. Good morning. Futures look like this on the S&P 500, up 1.2%. On the Nasdaq, up by 1.5%. The line from the Russian president, there are certain positive developments. His view. What about the Ukrainian view? Moments ago, seconds ago, just got a message from Anne-Marie Hordern, an exclusive one-on-one with the Foreign Minister of Ukraine. 11:30 Eastern Time. Anne-Marie speaking to the Ukrainian Foreign Minister, Tom, later this morning to get their side on this discussion.
An eventful morning, moving from Mr. Biden over to Mr. Kuleba. It'll be, you know, where are we going to be at 12 noon? And again, John, I can't say enough about the overlay this Friday and late Friday afternoon in Kiev. The news flow is not grim, but just the news flow is hugely dynamic right now.
Yeah, hours feel like weeks sometimes, Tom. And I'm sure for them that's what it's felt like over the last few weeks for sure. Looking forward to catching up with Minister Kuleba a little bit later this morning.
Kriti Gupta right now with a chart on oil. Kriti, what do you have?
Yeah, Tom, we've been talking about the impact essentially of these Russian barrels that potentially aren't going to be bought from Americans, from Europeans, sanctioned, of course, from Canada, the United Kingdom. But let's talk about where the U.S. really plays a role here. We know we've been a net exporter of oil, of natural gas since 2019. But take a look at the ramp up. That's really my chart of the day here. It shows the American U.S. oil output compared to the drop that you saw in 2020 coming from that COVID-19 onslaught. Tom, I was just at Sarah Share Week, we talked essentially about why the U.S. shale CEOs essentially aren't ramping up production. And they said those supply chain issues, those labor shortage issues, well, it means there's a lag built into the market. It's going to take at least a year to actually build those investments to get that output to really kind of ramp it up. And the problem here is that you have to make a very big call on simply, are these prices extremely high right now? Are they going to be this high in about a year? And that's the struggle that a lot of that sector is really dealing with right now. Is those investments really worth it?
Critty, thank you so much. Greatly appreciate it. Much more through the morning. What we know is commodities are intangible. In the words of Gartman, they fall in your foot and they hurt you. We had a tangible response when Dawe Kung visited with us from DWS the other day on commodities. And this is the back and forth of the bid and ask within the commodity world. Mr. Kung joins us this morning as well. I don't want to talk specifically about LME. I don't want you to throw LME under the bus, if you will. But right now we're having challenges in selected commodities in price discovery. On this Friday, are there orderly markets in your world?
For the most part, we do see the market is relatively orderly despite the stresses, but there are certain markets that's not trading right now. For example, LME, as of now, we believe the nickel part is still closed, and that does have an impact to overall commodity investment. We hope to see that resolve very soon.
Dawe Kung, when we were looking at some of the expectations that you had, if the sanctions went into effect, you could see Brent going up to $130 to $150 a barrel. We're not there yet. We tried to flirt with that territory in the immediate aftermath. Do you think that the retracement has been justified based on the marginal response that Critty Gupta was talking about in the shale patch and possible from oil producers in the Middle East?
We do see the commodity oil price to be 130 should the Russian barrels be displaced and not able to come back. The latest report we've seen has about 10% of the Russian production, about 700,000 barrels, that's been rejected, not been delivered in the current month. And we are not sure if that can be replaced. So if those barrels cannot be replaced and permanently impaired, then we definitely see higher price from here. The big question now is, what's the replacement possible for such disruption? And is the disruption limited to just what we see now, or could it get more extensive as the conflict continues to go on and the impact of the sanction continue to grow in the industry?
Halima Croft of RBC Capital came out and she said all of these discussions about bringing Iranian oil supplies back on market or potentially improving shale production really isn't the story. It's Saudi Arabia. That is really the only producer that has the capacity to replace Russian oil. Do you agree? And do you see that as becoming the bigger focus?
I do agree that Saudi Arabia absolutely has a very large role to play. Saudi Arabia has one of the best spare capacity available to be added into the current supply. So it makes sense to focus on that. At the same time, though, we do think there's also Iranian barrels available that can be brought back to the market. We think it more holistically across all the possible replacement. Also, the volume of displacement that could take place. The current sanction regime from U.S. and in UK does not preclude the oil from being sold globally. It would have to find a new home for those barrels. If that were not to be the case, if Europe also joined U.S. in the sanction, that would make those barrels much harder to be delivered. And I'm not sure if we can find replacements for that at this point.
Quickly here, the phrase is long and wrong. Forget about that. Sometimes you're long and right. When you're in a trend commodity and you get an exogenous constructive movement like this and you've got a huge gain, how do you know when to sell?
It's a very hard question. Timing is always a very hard question. I do think it's prudent for the investors to think about taking profit, and certainly one way...
Would you sell oil here?
One way we can benefit from the oil price movement and continue to benefit from that is to start looking at deferred exposure. There's clearly a big gap between the more recent delivery dates versus a later delivery date. And some of that we think will eventually normalize. Yeah. So we're looking for ways to take advantage of that.
John, deferred exposure's jargon, it means tuition payments.
Is that what it means, Tom?
Yeah. Just like
to you personally, that feels like a personal story. Dawe, great to catch up. Dawe Kung there of DWS. Just going through the contract table, Tom. The April price, the front month contract, 107, going out to say, let's go to March 2023, $85 a barrel.
Yeah.
That's the kind of thing that Darwey's talking about.
Yeah, let me translate, folks. The pros like Darwey Kuhn work in a futures market that's completely removed from the spot market, the present price market that the media covers.
Well, let's talk about this equity market, Tom. The S&P up almost 50 points, up a little more than 1%. Off one line this morning, Tom, we're still going off the same line from the Russian president. Still waiting for a response from Ukraine.
I'm looking at Havens, and the Havens do confirm that move, John. Gold under 2,000 nicely, and Swiss franc weaker. But as you say, we await headlines in a war-torn Ukraine.
11:30 Eastern time, Lisa, Anne-Marie sitting down with the Ukrainian foreign minister, one-on-one. What do you want to hear in a couple of hours from them?
What the breakpoints are to get to some sort of diplomatic resolution. We've already heard some shifting in the stance that they will adopt. They are willing to adopt a neutral stance. How much are they going to be willing to allow some of the regions, the Russia-friendly regions, to break away? They have said that that is a non-starter, and that might be really the place that people are looking for.
This issue of neutrality, Lisa, seems to be the big one right now in talks.
Well, potentially giving Vladimir Putin an out, and that might be where the softening could come from. That's some of the speculation that we're hearing put out there.
The hopes as well.
Exactly.
Futures up 1% on the S&P. From New York, heard on radio, seen on TV for our audience worldwide. This is Bloomberg Surveillance.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
This war is just exacerbating trends that we were already seeing.
There is no equilibrium in the market.
There's no doubt that there's more vulnerability in the forecast.
The risks of pushing a much more negative growth outlook is certainly one to be considered.
The Fed wants growth to slow some. They think it's growing faster than is sustainable, but they don't want to overdo it.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on an eventful Friday on radio, on television. John Farrow, I look at one headline from Putin, up we go. We've given back 40% of that move just in the last hour.
We're stuck between two-way headline risk, Tom. Futures up 47 on the S&P, up a little more than 1 full percentage point. Positive developments, the line from Vladimir Putin, Tom, a couple of hours ago.
So much going on here. And John, I think we really have to go right to Anne-Marie Horton's important interview with the foreign minister of Ukraine here in the 11 o'clock hour. He is confronting war news, which directly goes into the bond market and the write-downs ahead.
We keep going back to it, Tom, the difference between what they're telling us and what's happening on the ground, words and action. And we need to get the other side of the story. How do the Ukrainians interpret the conversations they've been having, the daily talks with the Russians at the moment? Because what we got from the Ukrainian foreign minister yesterday, I don't think that characterized things as positive in any way, shape or form. Hear from the man himself a couple of hours later on Bloomberg TV and Bloomberg Radio.
Lisa, we see what Bloomberg News does with the Ukraine update and all the different complexities of finance. You jump to the Financial Times and BlackRock with some form of estimated write-down. And then, Lisa, I go to the Telegraph and James Crisp with stunning photographs of a Kiev with a massive attack planned.
How do you have discussions about possibly ending the conflict when you're still getting bombed? And that, I think, is one key question that I'm curious to hear also from the Ukrainian foreign minister. Is that a precondition to any serious talks with Vladimir Putin? He says that there's progress being made. How much progress if the bombs are still falling?
Lisa, what will you listen for from President Biden in the 10 o'clock hour?
What additionally the U.S. is willing to do? I'm curious about other imports in addition to gas. I'm thinking of aluminum. I'm thinking of uranium. That's definitely catching people's attention. And then also how to transform what we're seeing on the inflation front into something that is used directly to combat the war in Ukraine rather than the broad-based inflationary pressures that we've been seeing for a number of months now.
I'm going to say, John, Goldman Sachs first out of the box with what we're going to see this weekend. I've said it all week. Everything redounds back to growth, markdowns, and Jan Hatzius gets out front.
And the 3 points Goldman makes in that growth forecast cut, Tom, tighter financial conditions, softer consumer sentiment, and slower growth in Europe. Those three things, how poisonous are they? How toxic are they for the outlook? To Lisa's point on what the president might do later on the imports of Russian goods, can he get the EU to come along for the ride? Going through the work of the Bloomberg team, just go through the numbers, Tom. Russia sells about 1/3 of its exports to the EU, 5% to the US. Europe, again and again, is the much, much bigger issue here. If the US leads, can they get the Europeans to follow?
And we saw UK sanctions, I believe, off Duma members here earlier. John, on the data, I'm going to go to the Haven measurement, and it's a more constructive safe haven screen than it was 2 days ago.
Things have picked up in the last hour. They've faded a bit, but picked up in the last hour, Tom. Futures up a little more than 1% on the S&P, last few hours, rather. The Nasdaq 100 up 1.3, call it 1.4%. Yields back through 2%, up a couple of basis points on the day, and crude back in a big way, Tom. That was up by several percentage points, now positive just 1/3 of 1% at 106.23.
Let's get to it right now. We have an incredibly important interview at 8:45 on the international relations of this war. Look forward to that. right now on the equity markets and the mathematics of it. Amy Wu Silverman joins with RBC Capital Markets. Amy, I looked at some of the famous OVD volatility surfaces yesterday. Folks, this is fancy PhD dynamics off the Bloomberg. And what I see is massively enhanced volatility across the complex. Explain the cost in the real world terms of trying to play volatility right here.
Yeah, look, Tom, we are breathing rarefied air in terms of volatility. We're at extremely high levels. If you're just looking for a simple hedge, it's going to cost you. I don't think that shocks anyone. I think what happens artificially, you know, we were talking about skew being a favorite metric of ours. Skew's a little skewed, right? When you have absolute levels of implied volatility high, you know, those numbers of percentile changes start to look low. I would just say key points are hedges are expensive, of course, but that does not mean that they will not necessarily pay out.
So talk to me about opportunity then. What's the big call for you?
I'd say, you know, two things. It really depends if you have to be in the market or you don't. If you have to be in the market, if you're already fully positioned, then I actually think overwriting strategies, essentially strategies where you've already been long the stock and you're selling calls on top of it, makes sense right now. One, because of the high levels of implied volatility, but two, because we're in kind of a strange environment where absolute volatility levels are high, but they didn't get high really quickly. They've actually been high this whole time. But then two, if you can be tactical about it, I do think there are still tail risks abound. So if you're going to play those tail risks by owning energy calls or by owning S&P puts, I think they make a lot of sense, even though, you know, the price tag may shock a few people.
Amy, we're talking about some of the disruptions in the commodity space and with LME and what happened there. Do you see any hints of potential issues with collateral, with counterparty risk, as you start to talk about doubling down in some of the derivative spaces?
Yeah, it's interesting you ask that question because one thing we were speaking with clients about yesterday was just these defaults on the bond side, you know, looking at, I learned about the aggregate function on Bloomberg yesterday because we were talking about, you know, for the institutions, how much of their exposure are to these different various Russian bonds. You're not seeing those tail risks priced yet, Lisa, in the options market. So people aren't really owning to play for some sort of, you know, kind of down the line damage like that. But I do think you will, because as we get, you know, further along and there's still no off ramp yet, people are starting to look at this, and they have been through the credit proxies like HYG, LQD, TLT, but I think they'll start to get more single stock as well.
And also, I mean, are margins being sort of increased, basically, not necessarily margin calls yet, but are there more conservative requirements to make wagers? And I know this is technical, but it's sort of the way of the clearinghouses to defend against some sort of situation like what the LME experienced.
Yeah, you know, look, in the equity options market, it's still business as usual. I think there are some pockets of exceptions. I forget what the ETF name is, but, you know, the one that's been halted, obviously we're still waiting to figure out what is going to happen to the options there. And, you know, what I'll say is we've seen this with various other products in the past. For instance, SVXY a couple years ago, I don't know if you remember, and TVIX before that. A lot of what it comes down to is what the actual prospectus language says about how this gets cleared out. And what I've learned that is interesting is sometimes it's completely up to, you know, whoever that provider is, and sometimes there's more clear rules around it. And, you know, right now that is not something that we are seeing one way or the other. It's business as usual, with the exception of those very few ETFs directly tied to Russia.
Amy, wonderful to catch up. Always is. Thank you. Amy Wu Silverman there of RBC Capital Markets. I want to get to this headline from Nestle. They say they have stopped importing non-essential products to Russia. Non-essential products include Nespresso. Those comments coming in a statement on the website just moments ago, Tom. And we've started to see Wall Street finally join their long list of companies pulling back. And of course, for obvious reasons, for Wall Street, it takes a while to untangle some of those relationships, Tom, to pull back. Much more complicated in many, many ways, but we're starting to see it from Goldman, from JP Morgan. Yeah. The one that stands out for me, Tom, for others too, Citi has a much bigger presence there.
Yes.
If they want to step back, can they make a sale if the only dance partners away for a sale, available for a sale, Tom, are banks that have been sanctioned? It's going to be tremendously difficult to pull back here. without just writing things off.
Yeah, the phrase I would use is workout, and maybe you do a complete write-off, but even if you write it off, what happens? Mr. Putin, I believe in the zeitgeist, is talking about nationalization of some of these businesses, commercial or banking, who knows. But John, I would really, really suggest that the complexities here are not understood. You don't just walk away.
Are we catching up with Damien a little bit later, Tom? We're doing that next?
I don't know.
I hope we are, because there is a coupon payment coming up next week, Lisa. There's some payments coming up next week for the Russian sovereign that are going to get a lot of attention, for good reason.
Because honestly, what is the actual rule now? They're banned from making coupon payments on sovereign debt in rubles to foreigners. Do you actually know the logistics of this?
Don't even try and describe it or explain it, and just let Damien do it in about 5 minutes. Because Lisa,
wise.
I've gone over it several times, and
I don't get it.
Very, very confusing.
Yes. And then there was also a payment made on dollar bonds of one of the oil majors to foreigners. So I don't understand what the logistics here, which is the reason why we haven't gotten that formal default yet that a lot of people are waiting for to solidify some of the losses that are being written about.
Can we bring it home just for a moment to the United States? Because I just heard from Neil Dutter of Renaissance Macro moments ago. Pinged me a message across the Bloomberg, Tom, and pointed me towards this. On the employment front in America, according to the Census Small Business Pulse survey, the percentage of firms reporting both an increase in paid employment and hours worked, the highest, the most since October. Services seeing some follow through from reopening as well. There are some good things still happening in the US economy, and I think that's a little bit of subtle pushback, Tom, against what maybe we've heard from Goldman more recently.
Well, yes, I would aggressively say there are some good things happening in the economy. And the real issue here, John, is do wages come up a little bit? They're not going to come up to 7.9%. But do we get wage growth to actually show some life? And that has a huge effect on consumption.
Is it fair to say, Tom, that this is one of the most difficult Fed meetings for this Fed chair in quite a while?
Get out the textbooks. Wait, there aren't any.
I mean, go back to the pandemic, but then in the pandemic, at least you knew what you meant to do.
It's a war. I mean, we're distant. We're across the
now?
Atlantic. They know in Europe this is a war.
Yields at 2% on 10s. Futures up more than 1%. From New York, heard on radio, seen on TV. Coming up later, an interview with the Ukrainian foreign minister and Bloomberg's Anne-Marie Hordern. You do not want to miss that. 11:30 Eastern Time. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. President Biden is set to call for an end to Russia's preferred trade status today. The move would clear the way for increased tariffs on Russian imports. The president can't unilaterally change Russia's trade status because that authority lies with Congress. Both Democratic and Republican lawmakers have called for suspending those normal trade relations. And the U.S. Senate has passed a spending bill that includes $13.6 billion in security and humanitarian aid for Ukraine. That was part of the $1.5 trillion measure that will keep the federal government in operation for the rest of the fiscal year. Federal agencies will see a 6.7% increase. The bill now goes to President Biden for his signature. And economists surveyed by Bloomberg expect Fed policymakers to be cautious when it comes to raising interest rates. According to the survey, the central bank will raise rates next week for the first time since 2018. Economists also say the Fed will signal a faster pace of hikes this year, though they may be cautious because of the war in Ukraine. And world powers and Iran suspended their efforts to revive the 2015 nuclear accord. That's reigniting a crisis that's likely to lead to another spike in oil prices and in Persian Gulf tensions. A top EU diplomat says negotiators have failed to bridge major differences. The two sides have been close to salvaging the agreement. And BlackRock reportedly has taken a $17 billion hit in losses on its Russian securities holdings. According to the Financial Times, the vast majority of those Russian assets can't be sold in the wake of the Russian invasion of Ukraine. BlackRock is the world's largest asset manager and has more than $10 trillion in assets under management. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
first step in building a connectome is to get your hands on some brains and then cut them up. It all sounds very grim, but Harvard turns out to be quite efficient with its brain harvesting. Jeff's lab can do a year's worth of research with a single mouse brain. Small chunks of the brain are fed into the slicer, where a diamond blade carves off a thin sliver of tissue. The tissue floats along some liquid and onto a piece of tape. The brain slices are then put into this very large machine, where they're photographed in the finest of detail. Software helps stitch the pictures back together into a single 3D image, and algorithms are applied to help make sense of what's going on inside of the brain.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Things are happening on Bloomberg in March. First, Bloomberg Triple Take, breaking down the day's biggest stories.
Today's Triple Take focus on the energy transition.
Then, the return of Bloomberg ETF IQ.
The last major holdouts of the ETF revolution.
And the debut of Bloomberg Crypto.
The CEO of Binance weighed in.
Finally, David Rubenstein brings you insights and advice from the world's greatest investors on a new season of Bloomberg Wealth. All this March, right here on Bloomberg.
People. The battle for freedom has its cost here at home as well. People are already feeling Putin's price hikes at the pump. As painful as the price is today, the costs are going to be higher if we do not act now to deal with this tyrant.
The President of the United States, this story is going to be with us for a while. Inflation through 2022 and perhaps beyond. The President calling it Putin's price hikes. From New York, good morning to you. Futures backing away, still up, but nowhere near session highs, up 0.9% on the S&P, on the Nasdaq up 1.2. Earlier on today, a lift off the back of some comments from President Putin on some so-called positive developments. Yields stay through 2%, up 2 basis points on the day. Crude backs away too, up just 1/3% to 106.35. And Tom, the cost of this still exposing itself, unraveling, revealed by the FT, BlackRock, a $17 billion hit on Russian exposure.
One of the stories there, and let's do the math on this, and thank you to Matt Miller for bringing this to my attention. We did the math. On BlackRock, it is 17 divided by 10,100. That is 17 billion divided by 10,100 billion. Damian Sassauer is with us right now on the teensy-weensy write-down at BlackRock. Damian, put this in scale. And I guess BlackRock is so big it doesn't matter. What does it mean for those that are not BlackRock?
Well, it's really the ETF assets. It's the ETF. It's the 18.1 billion iShares, JP Morgan ETF. It's basically, it had as much as 400 million of Russia on the books at the end of January. think that was written all the way down.
So what's
to,
their pressure on a Friday afternoon? I mean, they must be under huge regulatory pressure. Look, let's figure out what this stuff is worth now.
Well, good luck trying to find it out. I mean, a lot of the funds, and remember, a lot of the assets that are holding Russian debt, specifically at big institutions like BlackRock, are holding them in managed accounts. So they don't even report that. We're not even going to see the extent of the losses for some days, some weeks, some months, Tom. I mean, even yesterday when we were talking PIMCO, we were talking, what, $1.5 billion in CDS exposure, another $1 billion. Again, these are just numbers on a piece of paper. It's hard for us to say. For me, and Jonathan pointed it out earlier, it's next Wednesday. What do you think is going to be more important, the Fed or the fact that Russia's going to default on its coupon payments, $117 million on the 43s and the 23s? I mean, let's get clear here. That's the real issue here, and that's where my eyes are focused.
Damien, the language there, just to jump in, Russia is going to default. Russia's going to default. That's the language you used. Is it that certain for you?
Yes, it is. In fact, if you look at the bonds, and sorry about my earpiece, but I did catch the end of that. Basically,
okay,
the 23s are trading at.
Let's do it together here.
The 23s are trading at, what, 23 cents on the dollar now? Those 43s are trading at 22 cents on the dollar. The market is already pricing in a default. In fact, if you look at CDS today, Jonathan, 38.09, that's a 92% probability default according to 5-year CDS on Russia.
So, Damien, considering the fact that it's pretty much priced in, what's the difference between declaring it a default and actually just where we are right now?
Sorry about this. So yeah, no, and technical default, look, there's going to be a 30-day grace period on those Russian sovereign bonds. So, you know, yes, they can go into default, but they can pay them. I honestly, Lisa, for me, I'm just trying to keep this in my ear. I think, look, you know, the reality is, technical default. Yeah, no, they're definitely going to go into technical default on Wednesday. Gazprom and Rosneft, which is interesting, we talked about them. They did make dollar payments on those bonds. What I'm hearing from a lot of my sources is the fact that the money was there. Yes, we know that. But even in a restructuring, those dollars were not going to be able to go back onshore to Russia anyway. So may as well pay them now to creditors and maintain that relationship.
Damien, I'm staying with this. This is great. Matt's obnoxious and he's in my ear. And, you know, I'm glad I don't have to hear him is good. Damien, this is important. Yeah. Does it roll over into full faith and credit Russian debt? I mean, seriously, does the corporate world of Russia, does that roll over into the money that Putin really controls?
Well, I'll tell you, you know, the money that Putin really controls is the money onshore. And I've spent a lot of time looking at the Central Bank of Russia's website, working on my Russian, Tom. And let me tell you what I've noticed. $160 billion in dollars of repo has been issued just into 25th of February. Let me be clear. They haven't had as much activity in the repo market since February of 2016. I mean, this dwarfs anything we saw in 2014 when basically the local Russian banks, look, they use the repo market because they're seeing depositors remove all their cash from their local deposits. They need to replenish those deposits by going to the repo market. I'm talking Spurred Bank, I'm talking VTB, and my God, they're going in droves, which means the confidence on the ground in Russia in their local banking system is crumbling as we speak.
I look at this. Take your earpiece out, Damien. I give up. Let me talk to you about this, and we'll finish up here. You are a grizzled pro at this, and you and I have lived 98 and a few other joys along the way, including FX crisis. We talked about the tin crisis, the collapse of the cartel, what it did to Bolivia in 1985. All week, I'm not talking about EM, and all my radar's up because I'm not talking about EM. Right. How does this mess affect EM?
Well, look at what we're doing. Look at how the U.S. is approaching Venezuela. Look at how they're I mean, Juan Guaido. I mean, even Nicolas Maduro. I mean, the fact of the matter is we're taking steps we've never before seen taken. I'm talking on the political front here at the U.S. to basically replenish the lost barrels that we're losing, the 2.9 million barrels a day that we're losing according to Russia. Look, I don't know if we're going to ban Russian oil and gas. You know, I'm not even going to comment on that. But what you can comment is the new relationships that are forming at the margin. Just look at South Korea. Amidst it all, we have not even talked about the 12th largest economy on the planet. They just had a leadership change at the top, a pivot toward the U.S., a pivot toward Japan. That was an unexpected win by Yoon. And the fact of the matter is this, we're going to see more of that, especially in lieu of what we're going on. And look, Yoon's going to have a lot of trouble passing legislation. He's facing a supermajority in the Senate and the House in Korea. But the fact of the matter is, this is real. You're going to see a lot more countries, a lot more economies, Venezuela, South Korea, pivoting toward the U.S.
And I haven't mentioned, I mentioned it once this week in that Turkish lira with a difficult week as well. We'll have to follow that, of course, on the Black Sea. Damien Sassower, thank you so much. I recommend Earpiece 101. Pharaoh flunked it twice before he finally figured it out. Damien Sassower, seriously, thank you for early morning activity for all of us.
I use a molded one now, Tom.
Radio. I tried the molded one. I hear better with the regular one. I have the vanilla one. And John, I hear better with this one than with any of the molded ones I've ever had.
This one just doesn't fall out. We'll hook Damien up a little bit later. Tom, this note from UBS, and thank you, Sam Rowe, for flagging this. We use 56% less oil to produce $1 of GDP today than we did in 1973. That from Paul Donovan of UBS, and thank you to Sam Rowe for flagging that one out on Twitter this morning, Tom.
It is so important, and it goes to the Bloomberg Commodity Index chart I showed, inflation adjusted. I stole that from Damien Sassower. This is not the 70s, John, on all sorts of different parts of the commodity landscape.
GDP, Lisa,
the food
is
revolution.
less commodity intensive. But the bottom line, people need to eat, they need to use energy, and it's getting more expensive.
I was going to say, people need to eat. It's not just oil and gas, and that sort of conflagration of commodity price increases has a pretty significant impact.
Futures up 1% on the S&P 500, yields through 2%, just about up 2 basis points on the day. From New York City on TV and radio, this is Bloomberg.
The end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali, sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan, bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu, sama aja. Belum ada turis ke Bali, masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Live from New York City for our audience worldwide on TV and radio. Your market with a lift going into the opening bell about an hour from now. Up a little more than 1% on the S&P, up 46 points. On the Nasdaq 100, up 183, advancing 1.4%. Looking at yields climbing by 3 basis points to 2.0145% on a 10-year at least. On a 2-year, still in and around 170 going into the Federal Reserve meeting next Wednesday. Right now 173, up 3 or 4 basis points. So 2s, 10s, south of 30 to about 29 basis points at the moment. Crude is negative. It was positive by several percentage points, now 105.80, and a lot of this developing in the last few hours just off the back of one line from President Vladimir Putin, the Russian president. There are certain positive developments as far as negotiators from our side informed me. President Putin there to his Belarusian counterpart Alexander Lukashenko a little bit earlier this morning. 2 stops now this morning, 10:15 Eastern time. You will hear from the President of the United States. According to our reporting, expected to open up the way to introduce tariffs on Russian imports. There's a process there, and we can talk through it a little bit later. Then after that, 11:30 Eastern time, we will hear, Tom, from the Ukrainian foreign minister with Bloomberg's Anne-Marie, and that's where we get the other side of the story we desperately need this morning.
There's been a stunning silence out of Ukraine and the Ukraine leadership this morning. John, I want to suggest that Maria Tadeo's conversation, I believe it was 24 hours ago, with the leader of Estonia, who was royalty in Estonia, going back to her great-grandfather, I believe, and the 60 miles across the Gulf of Finland to Helsinki focuses today on the fact that the Finnish president is maybe front and center as the most important person in Europe.
And future membership of NATO, Tom, I imagine is going to be a big, big issue on the table for that country. As the Finnish president speaks with the Russian president. We understand from the Finnish president's office, Tom, in an emailed statement, that call has taken place. I'm waiting for a readout, so to speak, just some comments, and I haven't seen any so far.
Well, I'm seeing one just moments ago, this from Bloomberg, literally in the last 12 seconds. Finland's Niinisto calls on Putin to enact ceasefire in Ukraine. I would say, John, no surprise.
Do you think, Tom, this has driven this country, which has been in quite an awkward position for a long, long time, to shift further towards the West? Now, we often describe this, and I think this is an interesting conversation, Tom, and I know you want to go there. We always think about NATO going to the east. An inch to the east, not an inch to the east. You know that line.
To the north?
Not an inch eastwards, all of that.
What to the north?
What about these countries going to the west?
Well, that we're talking about, and I would suggest, well, Norway's Norway, but Sweden is different than Finland, and it will be a very nuanced separation between the discussions. To me, John, emotionally, it is about St. Petersburg, but far, far more to the far north. It's about Murmansk and the huge submarine and naval facilities that the Russian Federation, that the Russian Federation has up near Sweden and Finland, way to the north. Right now, we will migrate and try to get out front of a Fed meeting no one's talking about, except it is important. Lauren Goodwin is with New York Life Investments, and she is monitoring the ebb and flow of the American economy. Lauren, Chairman Powell is in an impossible position with rising inflation and, as Goldman Sachs marked down today, shorter economic growth. Which will be more important for you on March 16th?
Well, good morning, Tom, and good morning, everyone. Inflation is absolutely the top concern here for the Fed. We've had an inflation problem for a year. It's well noted. And the growth challenge that's being exacerbated by this crisis is real, but it's highly uncertain. And so I expect that we'll see 25 basis points out of the Fed on Wednesday, and for the next 2 meetings after that, as well, as the Fed tries to get ahead of, or really come from behind on this inflation challenge. Now, the Fed's policy, as well as a crisis like this, tend to impact the real economy on a lag, and that's why they're going to be a little more patient. I do also expect, though, Tom, to see a revision in the dot plot to show 5 or 6 interest rate increases over the course of this year.
In New York Life, you are hugely focused on the actuarial assumption of your investments. How do you do that as an economist at New York Life, given a war in Ukraine and given the massive uncertainty moving from pandemic to war? How do you advise New York Life on what their modeled interest rate should be?
There's certainly a lot of uncertainty in the near term, but we have the benefit of being able to think in the extremely long term when it comes to these actuarial assumptions and being able to be there for our policy holders and dividend receivers. And so short-term impacts like this, they certainly matter in the markets. We've been extremely tactical in trading on the investment side of the business. On the insurance side of the business, steady as she goes is the name of the game. And so we haven't yet seen a major impact to our assumptions based on this crisis.
So the tactical trading that you're doing right now, how have you sort of navigated throughout all of this uncertainty that's whipsawing based on headlines with very little verification?
Well, exogenous events like this tend to exacerbate pre-existing trends in the market. And of course, it's all about inflation here. And so when it comes to being in the market, we are really in the market every minute of every day, but leaning into some of the pre-existing asset classes that were favorable to us. So when it comes to inflation resilience, investors who can be really tactical, yes, are maybe thinking about commodities and precious metals, but investors that are thinking about their retirement are thinking about inflation resilience, asset classes that are also supported by structural trends, things like infrastructure, real estate, floating rate bonds. And so trying to bridge that balance between what's happening in the market every day in and day out with the goals of investors is the bridge that we try to balance.
And we started on the Fed coming up next week, and Citigroup put out a note this morning, as John was flagging, where they said that they expect 200 basis points of rate hikes this year. That means that they would end the year with the Fed funds rate near where that 10-year rate is right now. Do you foresee this as being a serious possibility given the concerns that we have around inflation?
Our base case expectation is for slightly less hiking than that. I think the growth impact of this crisis remains to be seen. That said, risks are to the hawkish side, and so I think it's very reasonable to expect that we could see an acceleration in the Fed's hiking cycle. The reason that I index closer to the 5, maybe 6 interest rate hikes over the course of this year is that we also have the factor of quantitative tightening, the Fed allowing some of its balance sheet to roll off, which will have an impact on financial conditions, and the impact to real economic factors like inflation and growth is less certain, but we know that there will be one, and there will be an impact to market transmission of those impacts. And so risks certainly to the hawkish side, but I still expect slightly less hawkish than what you've described.
Lauren, 200 basis points this year sounds like a lot, that's for sure. Lauren Goodwin there of the New York Life Investments. 200 basis points, Lisa. That includes a 50 basis point hike in May, or maybe later this year. That's a lot of work for this Fed to do with a yield curve on 2s, 10s, south of 30 basis points already before they've even made a move.
Although we have heard from these Fed officials that they're not that concerned about yield curve inversion, that they view some of the distortions in the market from some of the bond buying as creating less of a signal, perhaps, of recession from this exact measure. How much are they going to be looking at potential disturbance in markets? And then has the market really priced that in? I mean, honestly, I thought it was really striking that Ed Al-Husseini and others were saying that's already been priced in. If that's the case,
has it?
Then, then let's go.
Have you seen high yield spreads this week? What are we up year to date now? About 100 basis points?
Yeah, and actually the bigger rise, I would say, is in investment grade. And you saw the biggest record outflow this week in U.S. investment grade bond funds. At what point does this percolate into conditions of perhaps tightening?
John, I want to bring this up. I did this on radio yesterday with Lisa Abramowitz, that's who it was. I did this, John, on radio yesterday with Lisa Abramowitz. If you go to the website, SPIEF22, this is a globalization confab run by one V. Putin, St. Petersburg International Economic Forum, and it's still up 15 to 18 June 2022. John, I've been invited 3 times. I've never darkened the door, but to the St. Petersburg Forum or to Davos in May, not January. I just wonder, John, where is globalization in 12 months? That's secondary to the agony we're seeing in Ukraine right now, but it is germane to global finance. Where is that Stiglitzian phrase in a year?
Well, it's part of the process, the consequences of what we're seeing play out in that part of the world now, Tom. Deglobalization. As people start to think more about security, producing things at home, does that come with a higher price? And for a lot of people, the conclusion, the answer to that, Tom, is yes. We face higher prices. We're seeing tighter financial conditions. Because of the higher prices, consumer sentiment set to get hit. We're about to see slower growth in Europe. So put it all together. Go through the Goldman list, Tom. Tighter financial conditions.
Yes.
Softer consumer sentiment. Slower European growth. Of those three things, what do you think really worries this Federal Reserve right now as they look to embark on a rate hiking cycle?
They look at their mandate, and that was the distinction with Lagarde and the confusion with Lagarde yesterday, John. We're hawkish. John, at the end of the press conference, were they hawkish?
Can you make sense of that news conference yesterday? And by the way, are you and Bramo doing a radio show together without letting me know?
What's a new property?
At 9 Eastern.
Yeah, it's a Bramo
show. Has that been happening all week, Monday to Friday?
Yeah, it's been happening. It's not happening today, but it's been happening
It's
all
not
week.
happening today.
Why weren't you listening?
It's not happening.
In the breaks.
I was on TV. No one told me. Why don't we just join together? We could have done that for a special for a week. That would have worked out.
Would have been fun.
Didn't fancy it.
It's like 5 levels above.
You know when you're a kid and all the other 8-year-olds go to a party and you didn't even know it was happening and you find out Monday morning after a weekend?
Do you have a story to tell us, John?
Tough times. That didn't happen. Maybe it did. A few times. Futures at 1% on the S&P. On the NASDAQ, Tom, at 1.2.
In this grimness,
sure,
we miss the humor. I've gotten some emails on this, John. We're not doing humor much.
No, we're not, Tom, and for good reason. For good reason. And the hope that we talk about when the equity market is up. I go back to a day earlier this week, and this week, Tom, I forget which day it was now, when we were talking about the prospect of a breakthrough in diplomacy.
Wednesday.
And markets were up. And then on the same evening, the pictures that dominated the news wasn't a picture of the S&P 500. It was the tragedy, Lisa, in Mariupol.
Yeah.
And that's the contrast now, right? The words versus the reality, the actions.
It's the carnage on the ground, and it's the 2.5+ million refugees who now find themselves without a home trying to figure out how they move forward.
From New York City on TV and radio, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. The United Nations says that 2.5 million people have now fled Ukraine since the start of the invasion a little more than 2 weeks ago. Millions more are said to be displaced within Ukraine. The majority of those fleeing the country are entering Poland. A new study says that global death toll from the coronavirus could be 18.2 million. That is 3 times higher than official records suggest. A study from the University of Washington points to a lack of testing and unreliable data to explain the discrepancy. And in China, Xi Jinping wants to ensure that he can retain control over efforts to reform the economy. According to the Wall Street Journal, Xi may put a loyalist he has known for decades in charge of the country's economic and financial systems, who Lifing is said to be the leading candidate to be promoted to vice premier. And shares of London-based education and publishing company Pearson sold the most in 22 years today. Pearson says it has rejected 2 takeover proposals from Apollo Global Management, saying they undervalue the company. Pearson has a market cap of $7.7 billion. It's been undergoing a long and rocky turnaround effort. And singer and fashion entrepreneur Rihanna is working with advisors on an IPO that could value her Savage X Fenty lingerie company at $3 billion or more. Bloomberg has learned a listing could happen as soon as this year. Rihanna's company raised $125 million in January. The Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business? And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
We're in London, in Sydney,
In San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
To recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
The damage that will be inflicted on the global economy. I don't think that will be reversed. I don't think the sanctions will be reversed very quickly, even if there's good news. So from a macroeconomic point of view, which is the world I live in, we are going to feel the effects of this clearly for a while.
Dr. Kasman of JP Morgan, and I will not mince words, maybe more than in years. I will anxiously stop near 7 p.m. tonight for the weekly prospects of the JP Morgan team, led by Michael Ferroli, and always with an essay by Dr. Kasman. I really want to know the JP Morgan view, where the relationships back to Russia well past World War I and back to the Tsarist Empire. Right now, Lisa Bramlett and I are absolutely thrilled to present to you, as we've talked to General Kimmett, General Hodges, Admiral Stavridis, and of course the wonderful Angela Sten at Brookings, Mayra Rodriguez Vadreres, Managing Principal of MRV Associates, who is beyond esteem in the study of Russia. Her shingle is from Harvard of long ago, Marshall Goldman and others. Mayra, what does our audience need to know right now about the loneliness, the aloneness of Vladimir Putin?
You know, this is a man who for a very, very long time has been planning this tragic invasion. And for anybody who's been observing this, sadly, you know, we're not surprised. And, you know, I don't actually know how alone he is. I don't think so, because he actually has a lot of supporters. He has had support for decades amongst many Russians, not just at the upper echelons of the Kremlin. And he also has still a lot of supporters in the former Soviet Union. I know right now we're obviously very focused on Ukraine, but he has a lot of supporters in Central Asia. And he has done this invasion because he really thought he could get away with it.
What is the media getting wrong in our analysis right now? There's just a global onslaught of analysis of the military, the humanitarian crisis and such. What doesn't ring true to the analysis right now?
I think there is a lot of truth in what the media is saying. However, I think that unfortunately, what my biggest fear is going to happen is that with time, there will be a level of wariness and there will be the next big story. And it could be coming out of Asia or the Middle East or who knows, right? There's always that unpredictability. And I worry that people are going to be weary and tired. And that's what Vladimir Putin is also counting on. I think that the media also needs to focus on the fact that not only is there, of course, the tragic loss of life in Ukraine, there will be decades of incredible dislocation in that country from the psychological effects as well of being at war. From a markets perspective, obviously a lot less important than the human toll, but the markets are also going to feel the volatility for time to come. We're seeing a lot of action in metals, of course. We're seeing action in the spreads. But there's going to be a contagion effect in emerging markets.
A contagion effect in emerging markets. We've been trying to game out the potential contagion effect for big banks. We've seen that certainly in the price action in European institutions. How do you assess the potential risk at a time where it's not just the operations in Russia, with the likes of Goldman Sachs and JP Morgan exiting the region, but also all of the instruments tied to it, and then all of the instruments tied to the commodities that are significantly affected? How are you going about, given your Fed experience, gaming that out?
Yeah, that's a great point, and I'm glad that you're reminding your viewers of it. From a credit perspective, American banks have very, very little risk with Russia. If you look at Goldman Sachs' announcement that it's pulling out, less than 1% of its entire assets are in Russia. JP Morgan, I happened to be working at JP Morgan when it was first getting into Russian markets back in the mid-90s. Tremendously exciting period. But the assets as a percent of all of the over $1 trillion asset base for JP Morgan is very little. So from a credit perspective, the risk is low. The market risk, however, is much higher. You have all kinds of commodity-linked bonds. You have securitizations that are also based on Russian assets. You have foreign exchange portfolios. And then you have, of course, the fact that you have all kinds of countries like Sri Lanka, the former FSU, the former Soviet Union countries. You have some in Latin America that are very interconnected to exports and imports with Russia, not to mention Africa, of course. So that's really where I worry that some of that spillover is going to happen more from a market risk perspective rather than a counterparty, a credit risk perspective.
Are there specific banks, Myra, that you're keeping your eye on in terms of this risk expressing itself in a more concentrated fashion?
Yes, I think definitely Societe Generale and Unicredit from Italy. Those two banks are much, much more exposed to Russia from a credit perspective. And so then, of course, there's also the market risk perspective. Of course, Citibank, Goldman Sachs, JP Morgan, because they are the largest trading houses, you're still going to see some volatility in their trading portfolios. And it's not just going to be Russia and Ukraine, it's going to be all of the enormous emerging market portfolios that they trade.
Myra, thank you so much. Too short a visit. We'll do it again very soon. Myra Rodriguez Valladares, thank you so much with MRV. I look at these Russian experts, Lisa, and they just have a depth of knowledge, clearly with understanding the language that none of us have. I can't even tie their shoelaces. They're just killing it.
Well, and right now is such an important time to have that kind of understanding. I just want to go to Myra's point about Societe Generale. Taking a look at the price action in that particular bank, it is down 38% in the past month. You have seen dramatic devaluation of some of the European banks exactly because of the risks. And I thought it was helpful to understand how significant the risk of other nations that rely on the imports from Ukraine and Russia could be as well.
And you mentioned Unicredit of Italy and Milan. I have the clearest memories of the overt Eastern European expansion of UniCredit, just as one example. I mean, I don't have any opinion on SocGen or UniCredit as well, but there was a business plan, Lisa, 10 or 15, even 20 years ago that many of these people executed. You mentioned Citigroup earlier. With what's the working number now in Citigroup? 10 billion?
Something like that, and thousands of individuals who they're bringing out.
Well,
just want to say, UniCredit down almost 40% in that period of time the past month.
We will continue forward with an eventful Friday, and it is led by the comments of the President of the United States an hour from now, maybe an hour and 10 minutes, and then our Anne-Marie Horton, an important conversation of the day with the Foreign Minister of Ukraine. Stay with us on radio and television. This is Bloomberg.
I'm Johnny Ray Diaz from Tennis Channel with a special BNP Paribas Open update for Bloomberg TV and radio. Thursday's blockbuster matchup saw four-time major winner Naomi Osaka win the battle of the former U.S. Open champions as she took out Sloane Stephens in 3 sets in blustery conditions on Stadium 1. The Japanese superstar claimed the last 6 games of the match to advance in the desert.
I felt like I was fighting for my life. Like, I was playing against her, I was playing against the wind, it was crazy. But yeah, I mean, for me, I just kept thinking like she was going through the same circumstances as me, so, you know, I just have to will myself to try as hard as I could.
Also, Jack Sock got back to winning ways after 2 years of injury worries. The American dropped just 2 games in his victory over Juan Manuel Cerundolo. And don't forget, Tennis Channel's daily live coverage from Indian Wells hits the air daily at 1 p.m. Eastern. I'm Johnny Ray Diaz.
Energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This morning's gains continue to fade. From New York City this morning, good morning, good morning. Futures up around about 0.8%. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Ferro.
Live from New York City, we begin with the big issue. Russia stepping up its assault across Ukraine. President Biden commending Ukrainian efforts to hold back the invasion, delivering another warning for President Putin.
The United States and the people around the world are going to continue to support the Ukrainian people, I believe, as they defend their country. Ukraine will never be a victory for Putin.
The president speaking from the White House in just over an hour, according to our reporting, preparing to announce the end of Russia's preferred trade status and clearing the way for significantly higher tariffs. Meanwhile, one line from President Putin getting plenty of attention this morning. The Russian leader seeing, quote, positive movement in talks with Ukraine. Our team coverage starts right now with Maria Tadeo from Versailles and Anne-Marie down in D.C. Maria, first of all to you, what's the reaction been to that line from President Putin a few hours ago?
Look, Jonathan, there's a lot of cautious here because what I'm told repeatedly is that when it comes to Vladimir Putin and the Russian foreign policy, you should focus on the actions, not the words. And this is coming just a few hours after a hospital was bombed in Mariupol. We know that was a real tragedy happening there. We know that city has come under very intense attacks. We also know that yesterday, Sergei Lavrov continued to deny that Russia is engaging in a war, saying that this is a special mission. He also said Russia never had any intention to attack neighbors, but of course the reality on the ground is very different. And when you hear the information from Ukraine, I know we're going to speak to the foreign minister in a few hours, they continue to say we worry about more attacks from Russia, and we also worry, quote, about the use of biological weapons in cities that are still resisting Russian military attacks. So again, the line that I would caution everyone is you focus on the actions, not so much on the talk. And again, another point here that's very important. This is a war, Jonathan, that's not going well for Russia. It's been 15 days. Remember, the Kremlin was betting on a quick operation, a quick in-and-out war. Now this is turning into a 2-week long war with extreme resistance on the ground, and this is also a very expensive war, I should say, for Russia at a time in which the economy is coming under huge scrutiny.
Anne-Marie, two things to watch. 10:15 Eastern Time, the President of the United States, and then your interview with the Ukrainian Foreign Minister at 11:30.
Yeah, definitely two things to watch. On the first note, Jonathan, this is just another escalation from the West to put these penalties on Russia for this invasion. Though we should note, the U.S. doesn't import a whole lot of Russian goods. So revoking this normal trade status means that they're going to have much higher tariffs on those goods coming into the United States is a little bit more significant and symbolic. But the United States has been working with other G7 countries. Canada has already done this. Likely, dependingly, potentially, the European Union may follow suit. That would hurt a lot more. And then when it comes to Dmytro Kuleba, the foreign minister of Ukraine, he'll be sitting down with me virtually. Jonathan, what we really want to know is, first off the bat, what is the Ukrainian response to President Putin coming out and publicly sitting next to Alexander Lukashenko, saying that he's seen some positive developments in terms of what he's been told from his team on the diplomatic front? Because, Jonathan, on the ground, it seems that things are only getting worse.
Well, compare the action to the words. Maria, to come back to you on that, you touched on it. The action and the words seem to be very, very different. I remember a couple of days ago covering this market, equities up. We were talking about a diplomatic breakthrough following an interview that you conducted. And then later that evening, the only pictures that dominated the news cycle, a maternity hospital in Mariupol, totally devastated. Can you compare, can you reconcile what we heard from the Russian president this morning with what we're seeing play out in Ukraine on a daily basis?
Well, Well, Jonathan, we've seen those pictures. Those pictures are tragic. And in fact, the talk here is that Vladimir Putin, by attacking a hospital, by attacking pregnant women who were expecting to have child, may have been a war crime. The tone here today is very different from European leaders. They say that they're horrified by the brutality of this war that only seems to be going in crescendo. You also have to look at the daily bombings that we see from Russia to Ukraine, some of the big cities that we know they continue to fight. And then the other thing, of course, to note here, and this is presumably the key, is the fact that Russia has not agreed to a ceasefire. The Ukrainians continue to say, we'll believe it when we see it. And to believe that Russia is serious about a diplomatic way forward here, we need to have a ceasefire. As long as this blitzkrieg continues on Ukraine, there's nothing to talk about. We need a pause on the bombings and the daily attacks in the country, and that is not happening. By the way, when you look at the humanitarian situation too, Russia agreed to evacuate people, but the reality on the ground is also very different. In Mariupol, we talk about a real human tragedy if these people are not able to leave the city. Remember, Jonathan, it's been a week in which they've struggled to heat themselves, to have electricity and have access to proper food and water. So the situation on the ground is very dramatic, and we should continue to highlight that.
Maria, thank you. Maria Tadeo, out of a side today. Bloomberg's Anne-Marie staying close. Look out for that conversation a little bit later this morning, 11:30 Eastern Time. Anne-Marie Hordern sitting down with the Ukrainian Foreign Minister. A conversation, 11:30, you do not want to miss. We only have 50% of the story so far. We need to see the reaction, how they characterize current talks from their side of the table a little bit later. Off the back of those comments, the S&P 500, session highs up 1.85%, now up just 0.8%. Putting it all together, three issues now. This from Goldman: tighter financial conditions, slower European growth, softer consumer sentiment. What do? They downgrade their US GDP forecast to reflect higher crude and other drags on growth related to the war in Ukraine. They drop their fourth quarter estimate for 2022 from 2% to 1.75. Joining us on all of that, PGIM's Mike Collins, John Hancock's Emily Rowland, and Troy Gajewski of FS Investments. And Emily, if I can I start here? How would you know if we're in a bear market? How would you know?
Yeah, John, first of all, our hearts go out to the people of Ukraine. You know, hearing these stories is just heartbreaking, and it's often really difficult to the investment discussion, but that's certainly what we're here to do. And as far as, you know, keeping an eye out on bear markets, you know, we're seeing it certainly in some parts of the market that are really getting punished here. You know, energy, commodity prices, the only thing that's working in this market, which is certainly a challenge for investors. As far as stocks go, we're looking at an environment in which the fundamental backdrop remains decent here. You know, we've seen this negative price action play out. We're at about a 12% or so decline from the peak in the market, but that's really been based on fears of Fed tightening, geopolitical risk coming to the forefront. Meanwhile, earnings estimates continue to move higher here. So until we see a significant deterioration in economic growth, which frankly we're not seeing in the data, we just added 700,000 jobs to the U.S. economy. PMIs are still very elevated. Earnings estimates continue to move higher. We're very, you know, kind of cautiously optimistic here that there is an opportunity to add to positions.
Mike Collins, have you seen any deterioration in high yield and credit more broadly? I'm looking at high yield spreads wider by about 100 basis points year to date. Are you seeing anything dramatic, any bigger cracks more recently? And not just in the States, worldwide for that matter too, Mike.
Yeah, so obviously the bond market, or we like to think the bond market tends to sniff out these problems maybe a little sooner. So yeah, one thing you look at, Jonathan, is credit spreads. And they've actually been pretty well contained. Like you said, high yield spreads are, you know, 30% wider, you know, 100 basis points. Investment grade has actually suffered a little bit more. We looked at the relative value between them like we always do, and high quality spreads are wider as a percentage, and they're also closer to historical averages where high yield is still a little bit lower. But one of the, you know, differences obviously is in Europe, right? The European credit markets, just based on their proximity to the events in the Ukraine, are actually underperforming here quite a bit. But the big thing we're focused on are these financial conditions and these liquidity conditions, right? So you look at the money markets. Everything starts at the front end of the curve. You look at dislocations in the treasury curve. These little subtle signals, Jonathan, they're actually really troublesome right now, and they're pointing to quite a bit of stress in the markets.
We're all seeing the same headlines at the moment. We're going to have a media briefing on the summit that's taken place in Europe. from Draghi. We hear from him at the moment. He's talking about the cost of energy. We're going to hear from Macron, von der Leyen, and other European leaders as well. When those headlines come through, I'll get to them for you. I want to come to you, Troy, and pick up on what Mike was just talking about. Just little pockets of stress, tension. Can you identify them too?
Yeah, so, unfortunately, as you know, we weren't optimistic about vanilla assets, whether it's the Barclays Ag or broader equities this year, just based on the fact that the Fed was going to be tightening policy, and that was playing out. And then, of course, you had the additional shock of the terrible Ukraine crisis, as Emily was saying. Our hearts go out to all the people suffering there. And so it's unnerving to see some of these cracks now, when the Fed has still expanded their balance sheet by over $170 billion so far this year, right? So you've had substantial market stress, you've had widening in high yield, you've had some financing pockets of uncertainty, and the Fed has yet to hike. And not only have they yet to hike, they've yet to stop expanding their balance sheet, right? So to Emily's point, on the fundamentals of the economy, yes, we'll have slower growth this year because of the energy shock than we would have, all things being equal, as substitution effects take place. But earnings should still be relatively robust. But at the end of the day, it's very hard for markets to make higher highs when the Fed is tightening policy. And so we're clearly well away from that right now.
Well, I want to go back to Emily in just a moment and get her thoughts on where she'd be adding, given the dislocation we've just seen, given what she said a couple of minutes ago. I'll come back to that in a moment. Some headlines from the Italian leader, the Prime Minister Mario Draghi, saying the EU sees 200 billion euros from taxing extra profits of energy companies, going on to say many EU states plan taxing extra profits of energy companies. There's a summit ongoing. We're starting to hear from the leaders in a media briefing. We're hearing from Mario Draghi as well. Going to look into that a little bit more for you. Anything to talk about, I'll touch base with Maria Tadeo in just a moment. Abby, I'm going to come to you and get some movers about 20 minutes out from the opening bell.
Well, John, we are, of course, looking at a bullish start here for stocks. The S&P 500 E-mini futures may be off the 1.8 or so highs, but we are up about 0.75%. The NASDAQ 100 futures up about 1%. Not surprisingly, big tech is strong. Alphabet up about 1%. As a representative of that group, Boeing, or the industrial complex, also doing well, up 1.9%. Consumer goods, especially those that export to Russia on the optimism around the recent Putin comments, faring well. Anheuser-Busch up about 3%. And then, not surprisingly, the travel trade doing very well. United Airlines, the most exposure on an international basis, up 2.9%, John.
Abby, thank you. Just hearing from the Italian Prime Minister, Mario Draghi, speaking after an EU summit, saying the following: the EU sees 200 billion euros from taxing extra profits of energy companies, and suggesting that many EU states might be heading in that direction, saying many EU states plan taxing extra profits of energy companies. More on that a little bit later. Coming up, war in Ukraine, clouding the outlook for global central banks.
The war in Ukraine is a substantial upside risk, especially to energy prices. Inflation could also turn out to be higher over the medium term.
A confusing ECB news conference. It's the Fed's turn. Up next.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.